and that is utilities. XLU is the spider for that, trading at about 62.86. They're buying the 62 puts out in December in pretty big numbers. I mean, take a look at the size of trade that went on out there in this one. They were buying, let's see, 21,000 D62 puts. That's a ton of those puts. I'll be in this about a month, and I like for this one, if it does break down, to basically target right around that level to get down and push 62 hard to the downside. Quick update, Scott, not one that we did on air, but worth talking about, and that is yesterday, somebody had a very prescient buy on these Hewlett-Packard HPQ 1850 calls. Now, that's right where the stock was yesterday, but they came in and bought these calls for about 14 cents. Of course, they get the approach from Xerox this morning, and because of that approach, the stock just zooms through $21 to the upside, turning this into about a 19 times on your money for the people that bought those calls yesterday. Just thought it was worth pointing out that somebody seemed to have today's newspaper yesterday in this particular name.
That's why we love what you do, Doc. Appreciate you bringing that to us. Come on back over here.
Okay.
All right, Winnebago shares surging more than 100% this year. The RV maker meeting investors today. We're there for a first on CNBC interview with that company's CEO. We'll do that straight ahead.
It's another Wednesday afternoon, yet another cold day. So ditch the British winter and chase the sun across the globe with British Airways from London Gatwick to enjoy a warm Bayesian welcome.
How are you doing? Enjoying the sunshine?
Fly from London Gatwick to Barbados with British Airways, with flights and 7 nights hotel from just £699 per person. Don't miss out. Book by November the 12th at ba.com/wintersun with British Airways. Incredible is within reach. Booking fees and conditions may apply. Limited availability. Selected flights in March.
Whether you're waiting for a train or a takeaway, with Tesco Mobile you don't have to wait for a brilliant deal. Our best ever Black Friday event is on. This week you can get a Samsung Galaxy A50 for just $17.49 a month. That's our lowest ever price. Get yours by the 10th of November. Tesco Mobile. Every little helps.
Best ever Black Friday based on range of products in promotion was £18.99, now £17.49. 36-month credit agreement, rolling monthly usage agreement, subject to status, phase policy applies. See tescomobile.com/terms.
Hello? This is Dustin. I found something. Is anybody there?
We hear you, Dustin. With Sky Q, you can easily catch up on epic Netflix shows like Stranger Things and then watch award-winning Sky originals like Chernobyl. Get Sky and Netflix all in one place on Sky Q for one surprisingly low price, just £25 a month. Visit sky.com and join today. Offer ends November 14th. 18-month minimum terms. Prices may change during contract. Requires Sky Q box connected to broadband. Set up from £20. Further terms apply.
What if you could keep up with cable news even when you're on the go? With TuneIn Premium, you can listen to MSNBC live without any commercial interruptions. All of the news, none of the ads. Listen live on TuneIn Premium today.
Hey, can't watch the big NBA game because your life's just too busy? I've got some news for you. TuneIn Premium is the answer to all your problems. Hear every home and away game live or on demand everywhere you go. Just search NBA to listen.
Get social with TuneIn. Follow TuneIn on Facebook, Twitter, and Instagram to discover what's happening in the app and around the world. Be the first to know about upcoming games and the hottest new music. Follow @TuneIn and always be in the know.
This is not a commercial. This is a reminder. With TuneIn Premium, you could be listening to more music commercial-free. Get over 45 commercial-free music stations. Visit TuneIn.com/premium to upgrade.
Welcome back. Winnebago Industries holding its investor day in New York City. That stock doubling this year. Our Frank Holland is there with a special guest. Frank?
Hey, good afternoon, Scott. That's absolutely right. Shares of Winnebago rising more than 100% in 2019 on the strength of strong sales of RV towables, just like the one we're standing in right now. The company also reporting record profit in fiscal year 2019, and Winnebago holding its investor day here in New York City, right outside of Central Park, where it's displaying towables like this one that saw sales rise by 6% last quarter, and also its iconic motorhomes that saw sales decline by 12% last quarter. And right now I'm joined by Winnebago CEO Michael Happy. Mr. Happy, thanks for joining us. Let's get right into this one. What do you think your stock success in 2019 says about investor confidence in your company and consumer-facing stocks?
Yeah, I think specific to our company, over the last several years, we've been in the midst of a strategic and a financial transformation. We're both strengthening our core RV business, but we're diversifying into an outdoor lifestyle portfolio. And financially, we've been performing consistently, delivering results. We've tripled our profit over the last 3 years. We've tripled our RV market share. So I believe investors believe both in the long-term view of our future, but they also see us delivering in the short term. From a consumer discretionary standpoint, we still believe the American consumer is strong. We are seeing good attendance and retail vitality at a lot of our retail shows, both in the RV, but also the marine space. So consumers are continuing to invest in experiences with their families and friends in the outdoors.
Great year for you overall, but over the last 2 months, your stock and also your chief rival Thor in the RV space, both of you have far outperformed the broader market. What do you attribute that to? And do you think that kind of growth can continue for the rest of this year and maybe even extend into 2020?
Yeah, I think we're both two different companies with different playbooks, but we're obviously both taking advantage of that secular consumer desire to be outdoors and again, experience and create memories. So from a Winnebago standpoint, we see 2019 and 2020 really as a great opportunity for us to continue to outperform the market. We believe that the RV and the marine market will be stable here over the course of the next probably 6 to 18 months. And we believe at our company that we'll continue to outperform in each of those markets.
Well, speaking of investors, one of our traders is a Winnebago investor. We're going to toss things over to Jim with a question for you.
Hi, Mr. Happy. Thanks for taking the question. And even though they call me a trader, I'm a long-term investor. So I've been with your company for a long time now. I'm loving seeing it return to its peak from 2 years ago. And obviously one heck of a 2019. But from here's my question. How do you think we get more turns on the multiple? We're looking at basically 11 times forward earnings. A PEG ratio well below 1. What are you thinking you can do to get that multiple closer to 14?
Yeah, I think the key to that is just to continue to outperform our peers and the competition in the industries we compete in. We're less worried about the size of company that we have. We're more worried about, obviously, market share. We're worried about superior profitability on the bottom line as it, compares to our competitors. So I think if we continue to execute our playbook and we outperform the industries, again, that we compete in, I believe we'll be rewarded, by the financial markets and our investors with a fair price for our company.
And Mr. Happy, over the past 4 years, you've returned $69 million in buybacks and dividends to your shareholders. After 2 big acquisitions over the last 18 months, how does that strategy change or evolve?
Yeah, you're referencing we've been very active on the acquisition side. We invested in a Grand Design RV several years ago, Chris-Craft in the marine business, and here just recently we announced the acquisition of Newmar, which we'll close on very shortly. So as a cyclical company, we need to be very careful about our balance sheet. We're very pleased with the ability to, in the past, have obviously offered a consistent dividend and to buy back shares appropriately. But here over the course of the next year, we'll keep the dividend consistent, but we'll make sure that the balance sheet is healthy by paying down some debt, ensuring a path to liquidity should the markets change, and continuing to very selectively invest in growth. So it'll be a very balanced capital allocation strategy, but very focused on making sure that we're especially financially healthy from a debt standpoint in the next year.
All right, Winnebago shares up more than 100% in 2019. Mr. Happy, thanks for joining us.
Good to see you. Yeah.
Scott, back over to you.
All right, Frank, we appreciate that very much. All right, we asked some questions. Now you have some questions for us. We're going to answer them now. Joe, to you first from Mark in Texas, Motorola. What do you do with Motorola? And I see you just sold it.
Yeah, I rang the register on Motorola. The guidance on revenue growth was weak on the prior quarter. They have the issue as it relates to intellectual property with Hytera Communications. That's probably going to lead to litigation at some point here in Chicago.
Okay, Jimmy, Kara in Michigan, at what price should I sell Apple and take profits?
I'm thinking about what Jimmy Cramer always says is don't trade it, just own it, right? Having said that, I think there's a point at which you trim it, okay? And I'd look to that at the end of this month. I would expect this to be up around 265, maybe higher than that. But as you get to Thanksgiving, that's probably a time to trim it as expectations will have been priced in already for the holiday selling season.
Court, Amman in Hong Kong, what's your view on private equity?
Well, I actually love private equity. I love it as an asset class, as a diversifier, as well as I love asset management firms that have a portion of their portfolio in private equity. And there's a couple of interesting things there. I mean, there was a survey done by Preqin recently, and 75% of active private equity investors are willing to commit the same amount or more capital within the next 12 months into the space, right? So what does that say if you own a Blackstone, a KKR, or even a Goldman Sachs with exposure to alternatives, right? That means there's more capital flowing in the door. That's more fees. The only thing I'm a little concerned about is the money chasing deals right now, right? And so if they can find good deals and invest that capital, it becomes a self-fulfilling prophecy. You get more and more assets into the space, and boom, you keep it going. So long and short of it is I like companies with exposure to private equity.
Okay, Bryn, for you from John in Florida. Ooh, Pinterest.
Ooh, yeah, I own it.
Gotten smoked.
It has. I own it. I bought some more when it sold off after its earnings. I think of the 2019 IPO class. This is a long-term winner. You know, Ben Silbermann is a great CEO. He's a co-founder. He still owns a significant amount. The long term on Pinterest is simple, is that they need to continue to grow their active user base, which is an important metric to follow. They currently have about 322 million. Also, what they need to do is continue to make it easier to shop. And that's where they really differentiate themselves and need to differentiate themselves, is when you go on there, it's very simple to actually purchase. They're growing incredibly overseas. And so I think there's a lot of optionality. That being said, it's a new public company. I think Ben is getting his footing solid about being a CEO of a public company. I did buy it around the 20s, and I'm going to hold it long term.
Okay. Lastly, from Diana in Arizona for you, John, AT&T. What do you do? Is it a buy?
Diana, I think everybody has been upgrading shares of this one lately. Virtually everybody. UBS and so forth have moved targets up $3 or $4. Their COO says that the losses of DTV subscribers have peaked. That's a good sign, and we've got a lot of upside call buying at the 41 strike in January. I would hold it.
Okay, good stuff. Thank you. We'll take a quick break. We'll come back with your final trade straight ahead.
I don't like the idea of my broker taking the up.
It's another Wednesday afternoon, yet another cold day. So ditch the British winter and chase the sun across the globe with British Airways from London Gatwick. Experience Mexican culture and relax by the Caribbean Sea. Fly from London Gatwick to Cancun with British Airways from £275 each way based on a return fare. Don't miss out. Book by November the 12th at ba.com/wintersun with British Airways. Incredible is within reach. Booking fees and conditions may apply. Limited availability. Selected flights in March.
London. Switch to Vodafone, the UK's best mobile network, and Be Unlimited, because the best phones deserve the best network and our new unlimited data plans. The future is exciting. Ready? Vodafone.
Max download speeds apply to unlimited data. Best network as voted by readers of trusted reviews. Terms at vodafone.co.uk/unlimited.
The nights have started to draw in, and at DFS we know that can only mean one thing. Everyone's spending more time at home getting nice and cozy. You can't beat it. That's why our autumn-winter collection sofas are handmade to order for complete comfort. And many are guaranteed to be delivered in time for Christmas. So make sure you come home to a sofa that's perfect for you. DFS.
Whether you're waiting for a train or a takeaway, with Tesco Mobile you don't have to wait for a brilliant deal. Our best ever Black Friday event is on. This week you can get a Samsung Galaxy A50 for just $17.49 a month. That's our lowest ever price. Get yours by the 10th of November. Tesco Mobile. Every little helps.
Best ever Black Friday based on range of products in promotion was £18.99, now £17.49. 36-month credit agreement, rolling monthly usage agreement, subject to status, various policy applies. See tescomobile.com/terms.
With the new Halifax Family Boost mortgage, children can get help to buy their first home, and mum and dad earn interest on their savings. Everyone's a winner. The new Halifax Family Boost mortgage. Halifax makes it happen.
Your home and savings could be at risk if mortgage repayments are not maintained. Only available in England and Wales. One applicant must hold a Halifax Reward or Ultimate Reward current account. Conditions and exclusions apply.
I'm Joe Kernan. Here's what's coming up on the exchange. Uber, Slack, Peloton, just a few of the hyped-up companies whose debut fell far below expectations. So what happened, and what can be learned from it? Plus, Target is up 65% this year. One analyst, though, says it could rally another 30% from here. He joins us to make his case. And some surprising news about McDonald's new CEO. That's ahead on Rapid Fire. I'll see you then. Halftime is back in 2 minutes.
In financial services, you hear lots of...
Did you know your favorite radio stations are in your pocket? Yes, the TuneIn app lets you listen to the same radio stations you pick up on your home or car radio anywhere you want. To see all the stations broadcasting in your area, find the local radio section on the home screen. Keep it local with TuneIn.
College football is live on TuneIn. Listen for free to games from more than 140 schools all season long.
To the 10, all the way to the checkerboard.
This Saturday at 3:30 p.m. Eastern, number 1 LSU is taking on number 2 Alabama with a battle between LSU's quarterback Joe Burrow and Alabama's QB Tua Tagovailoa. Both are potential number 1 picks in the NFL Draft. Listen to every call and every game of your school all season long for free on TuneIn. Just search college to listen today.
In the dictionary, a podcast is this: a digital audio file made available on the internet, typically as a series, of which new installments can be received by subscribers automatically. But on TuneIn, a podcast is this.
I'm Rachel Martin with David Green, and this is Up First from NPR News.
And it's defined like this.
Ladies and gentlemen, welcome to the show.
From news, sports, to pop culture, comedy, and beyond, define your own podcast possibilities on TuneIn. Some days life can get in the way of catching up on the news that moves your world. TuneIn is here to help. With live 24/7 coverage from CNN wherever you go on the TuneIn app, you can always find a slice of your schedule, however long, to check in on the biggest stories of the day.
Hell hath no fury. The president's counselor went on a rampage on a taped phone call with Washington Examiner reporter.
Search CNN on TuneIn to get the live news when it matters most.
Start hearing more of what you want. Upgrade to TuneIn Premium and get over 45 commercial-free music stations, live commercial-free news, and every live NFL, MLB, NBA, and NHL game. Visit TuneIn.com/premium to upgrade.
The NBA is on TuneIn Premium.
He shoots it. It's good. It's a 1-point lead. They don't have a timeout.
Each week, TuneIn picks an NBA game you just can't miss.
You're off to Wiggins, straight away on the triple try. Bingo! He knocks it down at the buzzer.
The defending champions, Toronto Raptors, are in LA to take on the red-hot LA Lakers. Tip-off is at 9:30 p.m. Eastern this Sunday. Search NBA on TuneIn to follow your favorite NBA team today.
I want to remind you of a very special halftime show for you this Friday, November 8th, to honor Veterans Day. We'll be live from the Women's Memorial in Arlington, Virginia. Do not want to miss it. Right here on CNBC. Of course, same time, same place, noon Eastern. All right, let's kick Roku. Jimmy, earnings after the bell.
Yeah, I mean,
shares are only up 365% this year.
And he owns it. Lucky guy, lucky guy.
Yeah, I mean, in and out, in and out. Look, what you're looking for here is an outperform on revenue growth, subscriber growth, ARPU growth. That's what you've gotten in each of the last 3 or 4 quarters. I expect it again today. As far as what you do with the stock, look, I'll be on the show tomorrow. Let's see how it trades. If it responds positively tomorrow, I think that's an all clear sign to buy more. I own some now. I could own more. It's
Okay.
that simple.
All right. Good stuff. What about Qualcomm after the bell?
You know, look, Qualcomm, I think as a trader, you could buy it and expect a good quarter. As an investor, which I am, I have a concern that there is very little on the litigation front right now. And this stock, whenever the litigation horizon is clear, that's usually a time you want to lighten up on it because somebody's gearing up to sue them.
You're an investor and a trader. I mean, you can be both.
So, and I gave both answers.
Right.
As a trader, I think you can buy it into the earnings.
No, but I'm saying, like, obviously you're more of a trader than an investor in Roku, I think, right?
You are 100% correct.
Okay.
And I
Qualcomm's a great company.
I'll be on with you tomorrow. It'll be fun.
It will. I'm looking forward to it. We'll see. A lot to live up to given the move in the stock.
Yeah, it'll be an interesting day.
Okay. Let's do final trades. Bryn, why don't you kick us off today?
Final trade is Delta. And Delta's been a volatile stock this year, and we actually have owned it and wrote covered calls against it. You know, Delta has the best margins of the legacy airlines against United and American. It pays a nice dividend. Warren Buffett's the largest shareholder of Delta, and we think it's a good opportunity as global growth, if it happens to go positive, it'll be a good tailwind to Delta.
Okay. Court?
Well, I'm gonna go with the home base today. So at the firm, we have a buy rating on Best Buy, and we think going into the holiday season.
I was going to say, what are you, long Chicago?
You know what?
Hurry up.
Bottom line, Best Buy going into the holiday season, the lone kind of big box retailer, and they're competing with Amazon. They are holding their own, so we like it for the long term.
Good stuff. Thank you. Sorry, we only have so much time. Doc, you got 20 seconds.
Juniper, Scott, they're buying the 26 calls, big numbers. I bought them.
Farmer Jim?
CVS, watch the multiple on this come up as debt goes down.
Okay.
BlackRock above
Joey.
500.
All right, BlackRock.
I like it, and I agree. All day.
All right, good stuff. Thanks, everybody. Thanks for watching as well. The Exchange with Joe Kernan begins right now.
You got that right, Judge. Welcome, everybody. Here's what's ahead. From unicorns to, what do you think we ought to call them? They're calling them donkeys here. A look at why many of Silicon Valley's biggest darlings did not win over Wall Street and what the lesson is for those waiting in the wings. Plus the tax that could rock Wall Street, another one, not the one you're thinking of. We're breaking down Elizabeth Warren's latest bombshell proposal buried within the lines of her health care proposal. And the recession ghost that was hovering over investor sentiment seems to be lifting. It's not Halloween anymore. Are we setting up for a year-end rally? We already had a little bit of one, right? We begin with today's markets. Who better than Dom Chu, who I see so much, and now I'm just a few feet away from you.
Just not that early in the morning, right, Joe? Because he is like standing right over there right now. Anyway, let's talk about the markets because we are pulling back a bit. We started off with marginal gains and losses. They've accelerated a little bit to the downside in the wake of some headlines that the U.S.-China trade talks may resolve themselves, if they even do so, later on in December. Those particular reports sending stocks lower in the day. The Dow Industrials down by 37 points. The S&P 500 down by 5. At the highs today, we were up about 8 points. We were down 4 at the lows, so just about at those low levels right now, as you can see, moving to the downside here. One place to look at, over the last month, check out what's been happening with interest rates, because the difference between yields on 10-year government bonds and 2-year government bonds in the United States, remember, down here was minus 5 basis points. It's all the way up, you can see here, to about 22. So that move higher in interest rate differentials means the S&P financials were the best performing sector so far over the last 1 month. We'll watch those financial sectors for sure. And then the stocks of the day, check out what's happening with Xerox and HP. A couple stocks moving in different directions over the course of the past year still, with reports now. CNBC has learned that Xerox could be trying to buy HP. Both those stocks up big today in an otherwise mediocrely down tape. Joe, I'll send things back over to you.
Weird story. $8 billion company going after a $27 billion company.
Weird, right?
Yeah. Weird. I don't get it. I don't
stock.
get anything in the world lately, though, right? Am I right or am I right?
It's all kind of crazy.
But it is. Anyway, thank you, Dom. Welcome to The Exchange. I'm Joe Kernan, in for Kelly Evans. Uber continuing its recent slide as its IPO lockup expires today. It's one of a slew of hyped-up companies whose debut fell far below expectations, both the day it happened and really afterwards, I think. Slack and Peloton both lower by about 20% since going public. Lyft and Smile Direct clubbed down over 40% since hitting the market. I can do that. I can invest my own money and do that. So what happened? Uber CEO Dara Khosrowshahi had this to say at the New York Times DealBook conference.
There has been a fundamental revaluation of revenue growth and the value of profits and in an increasingly uncertain world, right? So the world around us, everything going on in politics, the global landscape has fundamentally changed over the past 2 years. And I think that the appetite for the unknown and high risk in the public markets is just gone down. And that has consequences.
Joining us now, CNBC's Leslie Picker and Deirdre Bosa, as well as Dan Gallagher, a reporter at the Wall Street Journal. I can point to a lot of things. Yeah. And I understand now that the metric has moved from, well, we're growing, our revenue's growing, we'll earn a profit eventually. Now people want profits, but I also think there was so much money sloshing around that these valuations in the private sector just got out of whack.
There was a groupthink mentality among these investors, and it's hard to say that there's been a revaluation when oftentimes in a lot of these unicorns, you've seen crossover investors that invest in both the public markets and the private markets. So I think a lot of it is more investor psychology than anything else. It's the fact that, once you stop seeing these things working, people stop giving money to companies that have similar financial profiles as those.
And everybody, I'll go to you, Dan. I mean, Amazon showed us a way to grow into an $800 billion company without showing profits because whatever they were doing with the money, it made sense. But not everyone's an Amazon, are they?
They're not, and it's been a long time since Amazon did that. And I think it's hard to argue that the markets now are similar to the markets then, even though that was pre-internet, boom and bust. But I think Leslie's right in the sense that you have, this fundamental, kind of revaluation going on in a lot of psychology. And what needs to happen, I think, is that there needs to be some discipline in the pre-IPO phase to not let the numbers get so high that once you get out of the gate, there's nowhere to go but down.
Deirdre, one thing we pointed out this morning, if SoftBank does some of the initial rounds and it's valued at this amount, and then they do an additional round much higher, and they're the ones that are setting these new prices with their own investments. Why was the private price ever real, or was it?
Right, and I think you're seeing this all come to fruition. The earnings webcast where we heard from Masa-san, who's been driving a lot of these big bets, he was humbled overnight. He said, listen, my judgment might have been off, particularly when it comes to Uber and WeWork. What's so interesting, though, I think you're seeing this sort of spectrum of so-called tech companies, some more tech than others. You heard Brian Chesky, Airbnb's CEO, talk about this at DealBook today, trying to distance themselves from Uber, saying that they don't need to actually raise money. They've been profitable for the last 2 years. And then you had Uber trying to distance itself from WeWork. So what you're seeing are these different sort of tranches emerge and companies trying to distance themselves from other tech companies that perhaps grew too quickly, couldn't sustain growth, certainly couldn't sustain the losses. And as you said, Joe, SoftBank, Masa-san has been behind a lot of these companies that sort of something as tech, transportation as tech, fitness as tech.
You don't mark to market private company. The only way to market to market is the next round, and I don't know. It's not really that transparent in terms of what something is worth. I don't think. Should we be happy, Dan, that maybe WeWork, that they didn't pass the bag to public shareholders, that the smart money were the ones that really sort of got hosed on this thing?
I think it was a good sign that public investors are willing to be, more skeptical than certainly many in the private market. And I think what's probably surprised a lot of us is the effect that WeWork has had across the rest of it. People weren't inclined to see that you'd think people would be inclined to see that as a one-off because it's a kind of an odd real estate company. But it's really taken down the sentiment across all of tech. Peloton went out, I think that's very weak. And really I think they would have done better if they'd gone ahead of time, but still it's really affected, I think, valuations across the board on that.
A lot of it's WeWork, I think, a hangover, don't you think? That was such a disaster. We're talking serious money there.
It was, because what else could it be? The markets keep touching record highs or near record highs every day, so you can't really blame the overall market sentiment, market environment. It's clearly the people are looking at these individual cases and saying, you know what, I'm just going to get out of this space altogether.
Joe, I just hope that this lasts, though. I think that a lot of the VCs we talked to here in San Francisco say, WeWork wasn't ours. This company isn't based in San Francisco. It didn't have a lot of venture capital money behind it, notably Benchmark, but not a lot of the other high-profile firms here. I think you're still seeing a lot of money in private markets. Look at Masa-san's going out and raising Vision Fund 2. He said, he'll keep a better eye on corporate governance, but he says they're still expected to raise $100 billion, another $100 billion.
Leslie, Deirdre, thank you, Dan. Thank you. Speaking of new highs, I'm going to talk to a guy who I don't like being nice to him and giving him a lot of credit, but I think I'm going to have to. Today's stock shaking off various reports that trade tensions are boiling up yet again. Whether this points to investor confidence in or apathy towards the deal is a mystery, but my next guest says the specter of recession is starting to fade, and he was early on this. With me now, Jim Paulson, Chief Investment Strategist of the Leuthold Group. For a couple of years, you really weren't that excited, and we did have some flat sort of churning around, Jim, right? And then, I pay attention to what you say. I do, because you're what you are. I see really bad people that it doesn't matter. We have them on again and again. I follow closely, and you've been right. And you were right about this one. And that was that some of this monetary easing might work in a delayed way. You said you're going to start to see Europe improve, that the recession ghost wasn't going to be real, and it was time to get in the market. You said this about, how long ago was that to me? 4 or 5 months?
Well, at the end of December, and
so
I've
even
been
longer.
bullish since then, Joe.
Yeah,
yeah,
and it's starting to happen, I think, and it's we had 17 guys we asked or gals what their price target was. 14 of them are like at 2,900 or below. 14 out of 17.
Well, one of the things certainly that's kept this market going is just fear. I mean, it's been outsized really ever since last year, and it is easing finally a little bit, but it's still sort of palatable. I think some of the things that have really helped here, is we're seem like we're getting close to some kind of Chinese deal. I don't know if it'll amount to much, but it looks like we're going to do something. And I think it really helped that the bond market stopped giving such negative signals, Joe, and the yield curve now inversion is gone, and yields are turning up all over the globe. That's a pretty good sign of
Jim,
economic momentum returning.
Just hold that thought about the bond market, because I want to go to Rick. A news alert in the bond market right now. You led into it perfectly, Paulson. 10-year bonds up for auction. Rick Santelli is tracking the action at the CME. What's the demand like, Rick?
Joe, I grade the demand, and I gave this one as B as in boys, so definitely above average demand. Let's go through it, shall we? 27 billion 10-year notes. First offering, there'll be 2 reopenings to follow. This is the second leg of an $84 billion package. The yield at the auction, 1.809, which is basically right at the lows of the when-issued market. Lower yield, higher price. That really priced well. The bid to cover 2.49, best since April. 64.5 on directs, best since June. The only fly in the ointment, 12.4 on directs, was a little bit light. Dealers take the smallest amount since June, which was a little over 23%. So B as in boy, the sell-off that pushed rates up into the mid-180s was probably the main reason investors really stepped in. Tomorrow, the last leg, 30-year bonds. Back to you, Joe.
All right, unless we decide to do 100-year. I'm still pushing for that, Rick. Yeah, and you know what? I'd like to be able to redeem them. I've got plans to do that. Let's get back to Jim Paulson. So, Jim, let's go out a year. Let's go out 2 years. So is 3,100 or wherever we are on the S&P, is that going to be the low end of a range, or are we in just nosebleed territory and there's some comeuppance where we're like up there in the stratosphere in terms of valuations? What do you think?
Well, that is the question. I look at valuations, Joe, as the multiple on trailing earnings a little over 20 times. And that's just slightly above average from where we've been since 1990, when we've been in a permanently higher valuation range than we were for the previous 130 years. So I don't know if we're grossly overvalued. I don't really think so. And particularly when you look at yields as low as they are and inflation as low as they are, I think it's a tough call next few years because we are still at full employment. So if we start to grow again at a quicker pace, we're going to re-aggravate overheat pressures, the same things that gave us trouble in 2018, and that will necessitate higher yields, Fed tightening, it'll be pressure on valuations. The question is, how long before that shows up again? And I know productivity was off today, but it's been growing about 1.5% year on year now for the last 10 to 11 quarters, which is up significantly from what it did in the first 6 years of this recovery. And if we can get a little productivity sustained and grow at a modest pace at 2.5% or something, I think it could last for a while yet, and maybe have fairly significantly higher results out of the stock market. If we start to reaccelerate, earnings estimates are going to start to rise on Wall Street, and they're going to start rising from a 1.8% 10-year yield. The last time we had rising earnings estimates on Wall Street, we had a 3.25% 10-year yield. So a lot of upside against that discount rate.
All right, I was going to talk to you about the dollar because you're not sure it stays strong, which would also help theoretically in terms of multinationals. But we'll just leave it at that, Jim. We'll see you again, I'm sure, somewhere during the day, maybe in some other venue. But thanks. Thanks, Jim Paulson.
You bet. Thanks, John.
All right, here's what else is ahead on the exchange.
Coming up on the mark, Target is up 65% this year, but one analyst says it can rally another 30% from here. He'll make his case next. Plus, hidden in Elizabeth Warren's new tax plan for health care is a bombshell for wealthy investors. And is Amazon looking to get into the fitness business? This is The Exchange on CNBC.
London, switch to Vodafone, the UK's best mobile network, and be unlimited, because the best phones deserve the best network and our new unlimited data plans. The future is exciting. Ready? Vodafone.
Max download speeds apply to unlimited data. Best network as voted by readers of trusted reviews. Terms at vodafone.co.uk/unlimited.
It's one small step for man, one giant shop. Sorry, 2 giant shops a month at 10% off with the new Tesco Club Card Plus. Oh, and double data from Tesco Mobile, all for $7.99 every month.
New Tesco Club Card Plus. Value you can't stop talking about. Subscribe online from the 8th of November. £200 max spend per shop, in-store spend only. Club Card app required. Exclusions apply. Double data only on pay monthly. Home from home destinations. First payment payable up front, subject to status. See online for details.
A lot of people aren't aware that TuneIn lets you listen to the same terrestrial stations that you pick up on your FM AM dial, except you can hear them from anywhere. To see all the stations broadcasting in your area, find the local radio section on the home screen. Keep it local with TuneIn.
Hi, this is Brian Weber, host of NFL First and Goal, every Sunday, kicking off at 1 Eastern, only on TuneIn Premium. Be sure to listen this Sunday for the ultimate football fan experience, featuring 7 hours of commercial-free coverage of every scoring play around the NFL.
Right now, instead of hearing this, you could be listening to the music that keeps you moving with TuneIn Premium. Find today's biggest songs and all of your favorites commercial-free. Visit TuneIn.com/premium to upgrade.
College football is live on TuneIn. Listen for free to games from more than 140 schools all season long.
To the 10, all the way to the checkerboard.
This Saturday at 3:30 p.m. Eastern, number 1 LSU is taking on number 2 Alabama with a battle between LSU's quarterback Joe Burrow and Alabama's QB Tua Tagovailoa. Both are potential number 1 picks in the NFL draft. Listen to every call and every game of your school all season long for free on TuneIn. Just search college to listen today.
You love TuneIn for live breaking news from CNN, MSNBC, Fox, CNBC, and more. But when you can't catch your favorite show as it airs, it might just be a click away as a podcast. Search your favorite news station to explore all the on-demand news shows on TuneIn.
Welcome back to The Exchange. Shares of Target are up 67% since January, on pace for their best year ever. But despite that big move, one analyst says the stock can climb another 34% from here. For more, I'm joined by the man behind that call, Scott Mushkin, founder and CEO of R5 Capital, and here for the questioning. And I hope you got your story together, because Courtney Reagan is here, Scott. Really? So you got the highest target on the street, target of target.
Target of target.
Yeah.
I mean, the bottom line is Brian Cornell and his team have done a really good job. I mean, we do consumer surveys, part of my company, and we did one in 2014. And if you look at all the metrics in 2019, they're all popping. Particularly the way consumers.
That's why the stock's where it is now. That's why it's already here, up 67%.
But it's going to keep on trucking.
Really?
Yeah. The momentum in retail is a big deal, and consumers really like it. The economy's doing well, so we anticipate the stock can see.
You've got smaller stores next to all the yuppies. I guess they're not called yuppies now, are they? They're called millennials. No, yeah. What are they? So they got smaller stores where the people that want to shop at Target are.
Absolutely.
So
one of the things our survey showed was that the core Target shoppers, this young millennial person, they didn't have a lot of stores there, so they needed to bring the stores to the shoppers. They've done a good job at that.
Yeah, it meant upwardly mobile. I guess that doesn't describe millennials very well. Sorry,
as I'm a millennial, and as we age, we're starting to enjoy things.
Are you sure?
Enjoy, Joe.
Like socialism?
Yeah, things like good experiences in stores and providing for our families
that costs
and good
money.
values
That does
and
cost
all
money.
of that. It does. But
Needs a job.
Yeah, it's true. I mean, I think Target has done a really nice job integrating the stores and the website. And I know we talk about it a lot, but they looked at their stores not as liabilities, but as assets. They said, we can use these as fulfillment centers. And they've given some pretty compelling information. They said when they ship from a store, it's 40% less costly. That the drive-up services help them save 90%. So if you order online and pick it up, or order online and go into the store and get it. And so I think that's actually very compelling. They've remodeled stores. They spent a lot of money doing that, and they saw sales grow 2 to 4% from doing that. So all these things they did, or they said they were going to do years ago, where we thought, really? Stores? That's the wave of the future? it's actually really worked and helped grow the online business. It's pretty interesting.
You know, all this is going to end up in Scott's next research. I saw you going, right?
Exactly. Well, she's making some great points. I mean, so the remodeled stores are, they're fantastic. If it was 10 years ago and you saw a store like that, if it weren't for omnichannel, you'd be like, wow, this is one of the best remodels we've seen. But what we're seeing with consumers is they like to go into the stores. They like to experience the Target if it's fresh, and they have the option for omnichannel. So they've really hit a lot of notes, Target and the team. Plus, I mean, let's face it, they've benefited from a lot of closures. We had Toys R Us last year, but there's a lot of other closures going on in retail, and they've upscaled. They've upscaled their health and beauty care area, and they're really capturing, we think, additional consumers, particularly men, by the way.
And baby and toys, I think, was up like 15% for all of last year. So they have captured a really big portion of that. And to your other point, Scott, I mean, my sister-in-law, for instance, has 4 kids, right? She does a lot of online shopping, but at Target, she goes into the store. I said, why? She said, I don't know. I just like going into the Target store. Right. And then she always ends up with more than she intended to buy. So whatever they're doing, it's worked, and she didn't even really subconsciously realize that she was doing what she was doing.
Well, what we said is, and by the way, I have one more kid than she does, so I got 5. But, we said getting their Target back. They really needed to do that. They are one of the more loved brands out there. The brand ranks higher than Amazon, which I think is amazing. And if you looked at our survey, in the 18 to 29-year-old bucket, only one woman said they didn't like Target, which is insane. You can't get people to agree. 95% of the people won't say, stealing is wrong. So it's pretty amazing.
I think that's a good point, too, because you have a lot of staple items that Target sells, your laundry detergent and your toothpaste, but they also have all those brands. I think they have like 40 private label brands that they've built or refreshed in the last couple of years. So you go in for things you need, and then you walk out with some of those discretionary items that people do have an affinity for right now. So it's really working.
Thanks, Courtney. Scott, thank you.
Thank you.
I was going to talk to you about my hometown Kroger, but I don't know, you're going to say some bad things. I don't think.
We're worried a lot about Kroger.
You are, okay.
They had a good day yesterday, no doubt, but they face a lot
day.
of competition.
Okay,
a lot of competition.
Great. Thank you, Courtney. We'll see you around. Thank you. Coming up, a closer look at Elizabeth Warren's latest plan to tax the rich and the impact it could have on the markets. This is a doozy. You'll like this one. You don't even know what you have, what it's worth, but we're going to tax that. We get it somehow. Plus, Airbnb just suffered another setback courtesy of Jersey City. We have the details and more on the fallout for the company. The exchange is back in 2 minutes.
How well does your financial advisor know you?
Ladies and gents, may I introduce a magical number? 25! Oh yes, 25 UK millionaires guaranteed in this Friday's Euro Millions.
Euro Millions, celebrating 25 years of the National Lottery. Your numbers make amazing happen. Rules and procedures apply. Players must be 16 or over.
Did you know BT's business broadband comes with an always connected guarantee?
Always connected? I can't guarantee that. Nobody can.
BT can.
No, it's impossible. What if a squirrel bites through your cable?
That's when the 4G backup kicks in.
4G backup?
Yup.
Well, squirrels can't bite through 4G.
Exactly.
BT Business Broadband with the always connected, squirrel-proof guarantee. BT, beyond limits. Subject to availability. T's and C's apply.
This is the sound of festive fun in London. You want to keep your savings for the things you love this Christmas, not a new boiler. We're with you. So our boilers come with 2 years interest-free credit to keep your savings for a Merry Christmas. You'll get a 5-year British Gas warranty, and now we can quote by video call evenings or weekends. Get a quote by the 30th of November and get £150 off a new boiler, or £450 off for existing home care customers. Search British Gas New Boiler. Conditions apply.
Couldn't. Here's a swing and a drive deep to right field. Looking up. Goodbye, baseball.
Between game-winning shots and walk-off homers, follow TuneIn on social media to discover the latest and greatest in live sports.
With the 24th pick in the 2019 NFL Draft.
From live reminders that the biggest MLB games are on the air, to recommendations of the best new sports talk shows and podcasts.
He's going to be fine. He's going to be good right away in 3 years.
Follow at TuneIn on Facebook, Twitter, and Instagram to get the most out of TuneIn.
The Better Network is now on TuneIn. This is Brent Musburger. Search the Better Network. That's the BETR Network. And then let us get you better prepared to better enjoy the day in sports. The NFL, college football, basketball, hockey, baseball. Sharpen your edge. The Better Network is now on TuneIn. Be better informed. be better prepared. Search the Better Network. That's BETR.
Welcome back to the exchange. Here are some of the earnings moving this hour. Shares of WW, formerly Weight Watchers, sinking after revenue and guidance fell below forecast. Subscribers also saw a dip quarter over quarter. On the flip side, Coty shares are soaring, having their best day in nearly 9 months. The cosmetics company reporting a profit after posting a loss in the same period last year, beating analyst expectations. Company also reaffirmed its full-year guidance. And CVS Health, higher after earnings per share and revenue both beat estimates. Company getting a boost from strong results at its Aetna health insurance business. And speaking of CVS, don't miss the company's CEO tonight on Mad Money at 6 p.m. Eastern, right here on CNBC. Now, Sue Herrera for a CNBC News update.
Good to see you, Joe.
Good to see you.
All right, here's what's happening at this hour, everybody. Roger Stone arriving for day 2 of his trial on charges of lying to Congress. A jury has been seated, setting the stage for opening arguments in a criminal case stemming from Robert Mueller's probe of Russian meddling in the 2016 U.S. election. One man is dead and a sheriff's deputy injured after a shooting at a North Carolina hospital. A person in the deputy's custody went for his gun inside the medical center this morning, injuring him. A police officer then shot and killed the attacker. 1,000 scientists have signed on to a study which says Earth is facing a climate emergency. The study says greenhouse gas emissions are rising quickly and governments are not doing enough to slow it down. It was published on Tuesday in the Journal of Bioscience. And it's that time of year. Amazon Prime free one-day delivery is expanding to millions of new products. It will add 10 million products, including popular holiday gifts like toys and games and electronics. That is the news update this hour. It's great to see you, Joe.
It's good to see you, Sue. Yep. I always count on you for these little vignettes to get some of the general news in. I do. You. And you, how long has it been? We go way back. Let's not talk about that. In fact, let's never mind.
We both had a different hair color. Let's put it that way.
I'm not going to comment on that either. Here's what else. Mine is a little bit right here. If you look, you can see. Here's what else is coming up on the exchange.
Ahead, a very surprising new revelation about the new McDonald's CEO. A big defeat for Airbnb as it prepares to IPO next year. A match not made in Wall Street heaven. And a proposed tax in Elizabeth Warren's new healthcare plan would have a huge impact on all investors. That's all ahead on Rapid Fire.
I don't know what's going on. I've done all sorts of research, read earnings reports, looked at chart patterns. I've even built my own historic trading model.
And you're still not sure if you want to make the trade?
Exactly.
Sounds like a case of analysis paralysis.
Is there a cure?
TD Ameritrade's Trade Desk. They can help gut check your strategies and answer all your toughest questions.
Sounds perfect.
See, the stress level was here, and I got you down to here. I've done my job.
Call for a strategy gut check with TD Ameritrade.
Hi, I'm Barry Sloan with NewTek, your business solutions company. Does your business need money? Whether you need $10,000 or $10 million, you can count on NewTek, the nation's largest non-bank government-guaranteed lender. NewTek can help your business expand and grow. With a simple phone interview, we can pre-qualify you in just 48 hours. And with rates as low as 6%, you can see why so many businesses turn to NewTek. To see how easy getting a loan can be, contact NewTek, your business solutions company, today.
It was Sophie's big day. By the way, she's the next Mozart. As usual, we were behind schedule. But Sophie's enthusiasm could not be dampened. Not even by a runaway donut. We powered through it in our Toyota Prius. Because the star's gotta shine. No matter what.
It's unbelievable what you can do in the Prius. Toyota. Let's go places.
I got the job.
I guess we're moving.
Life is changing, and you need to sell your house. Agents are everywhere, but how do you know who you can trust? At HomeLight, you can compare actual performance data on thousands of agents near you, so you know you're getting the best agent for your needs. The best real estate agents sell homes for more money, and with HomeLight, it's easy to find them. Get started for free today at homelight.com.
This is Kate.
Hey.
She takes 2 prescriptions. Kate's son Jack takes 1 too. Kate works hard and thought she had good insurance. But she still pays too much. That's no good. So Kate downloaded the GoodRx app. Now she can compare prescription prices to find the best discounts. She even beats her insurance price. Good for you, Kate. Good for you. GoodRx. Stop paying too much for your prescriptions. Download the free app today.
We do the research, you reap the rewards. Head on over to cnbc.com/select.
First on Squawk Box, who's serving up new challenges for food delivery? Postmates CEO on the trends and competition heating up. Squawk Box tomorrow.
That detritus. Anyway, let's catch you up on a few stories that should be on your radar. It's time for Rapid Fire here with their take. Bill Griffith, who we need to talk for a second, Julia Borson, and Dom Chu. I said, I said, Sue and I go way back. I used to bring you stuff from The Wire that we had to rip off in 1989 and hand it to you as you read the breaking news at the Financial News
Back
Network.
when we were friends. And
I don't get to see you.
We played golf. You got up at 4 o'clock in the morning
to go to Emerson.
To wait
or Paramus
and lay the bag down.
I did.
To get us a spot.
But we digress.
Would you do that today?
He doesn't have to.
If I could play with you?
Sure.
No.
I didn't think so.
No, I would. You know I would. I miss you. I love you and I love Sue. I love everyone. First topic.
Right? Kernan.
Kernen. First topic. McDonald's new CEO, Chris Kempinski, has a big new job, and that what he needs to do is buy some stock, because about 7.5 million new problems we're talking about. The freshly minute CEO doesn't own a single share of McDonald's. He unloaded his roughly 11,000 shares of McDonald's back in May for about $4.4 million, according to regulatory filings. Now he needs to acquire $7.5 million worth of McDonald's shares in order to satisfy the company's rules on executive ownership. That might be a problem here if I had to buy $7.5 million worth of Comcast stock.
Yes, it would
can
be.
you help me out with that?
Sure, you bet. So I did a little digging this morning. Get this, 69% of the S&P 500 companies out there require their CEOs to own shares in the company equal to 6 times their salary, and McDonald's is one of those companies.
6 times their salary.
He's got some buying to do.
So he's either got some buying to do, or there may be a way, and I'm not some corporate governance expert, to take his compensation in stock or in options or accrue him in that way. But the idea here is what I thought was funny was when I first found out that where he sold it, I thought to myself, wait, that was where McDonald was at a record high.
Right at the top.
That was the high. That was the record high for the stock.
It seems like he had some explaining to do. Why did he sell then? And it raises the question, what is his long-term confidence in the company? And I mean, one thing I notice in the companies I cover is if you ever see a sale that is not part of a pre-planned selling plan,
estate plan,
you always raise a question about that.
Those pre-planned things, though.
10-5B1.
You know who fell back on that? Angelo Mazzillo, remember? That's why he was. I mean, those things are.
I'm not going to. And this brings to mind the CEOs who, with great fanfare, will announce, well, I've bought X number of shares of my company's stock at this point. You know, they're not being magnanimous about the whole thing. They're fulfilling a requirement.
I think it's just a common, if you want to do some class warfare, I think it's just amazing that, hey, you got to buy $7.5 million worth of this. You're a CEO, buy it. It's like, it must be nice, right?
All right, who had Kernan mentioning class warfare at 32?
No, I'm saying you could make the case that you could make the compensation case if they all can afford $10 million worth of their company stock. Not all of us could. Anyway, topic 2. Love can be a rough business, especially for Match Group. We're going really to this now? That's almighty. That stock falling more than 16% after reporting results. It has recovered somewhat, but still down about 4%. The online dating company beat on earnings, but forecast fourth quarter revenue below expectations.
You're doing so well. Yes, go ahead.
Swiping left or right?
I don't know. Which is I've never.
It's a perspective.
One factor weighing on the stock: competition from rivals like. I call it Bumbler because one of our producers is on it, and he's a Bumble. Anyway, Bumble and Facebook, but it's Bumble. It's not Bumble.
It's Bumble.
It's Bumble.
And it's been hugely successful. And the whole idea about Bumble is that it puts women in control and lets them be the one to decide whether or not they want to reach out. And
shouldn't they call it Daisy Hawkins or something?
That's so old-fashioned, Bill. That's the old school. I mean, Daisy Hawkins with the Daisy Hawkins dance. Anyway, this is a more contemporary approach.
I
to that.
see.
So Bumble.
Okay, Grandpa.
But then also you have.
Okay,
sorry,
boomer.
I mean,
Yeah,
but then you also have Facebook, which is
Physician, heal
launched,
thyself. Sorry.
Facebook also launched a dating service, and the thing about Facebook is it may not have the sort of identity of being a place to go for dating, but it has so much scale that even if it gets a tiny percent of the single people on Facebook to sign up and use that service, it's already gotten.
What I think is interesting, IAC, which owns all of these, Tinder and Match and all that, are spinning them off. Now, why would Barry Diller be doing that right now if he had faith in these companies? Because they're going to be a standalone.
But IAC still
I know
owns
that's his MO, but why now?
He still owns a huge chunk of Match, and this has always been his strategy with Expedia. This is, Angie's List. This is what he does when they're big enough and successful enough to operate on their own.
I wish we had more time. I really do.
Are we done already?
So you can swipe
We're going to
more
be
left or right,
because
or
we could
what
talk.
does that mean?
We could go back and talk. You know how those two old guys in the Muppets, me and you, could talk.
Waldorf and Statler.
We have no idea
We're there
about this
now.
new world. People get dates on.
We're there now.
Right?
Yes.
On their smartphones, yes. It's
On their smartphone.
I know. What's funny is the last time we were talking about this was with Julia when she was here in New Jersey. It was crazy.
We got another topic.
That's we have. I hope we have more than that.
People do
Does that
on
mean
their
you're swiping?
smartphones, they book places to stay. That's your segue.
Oh, that's right. Very good.
Look at
Very
that,
good.
Julia.
Well
Very
done,
good.
Julia.
Topic
So good.
3. Voters in Jersey City dealing a major blow to Airbnb. Just as the company prepares to go public, the city passing a measure that imposes strict new regulations on short-term rentals. Owners are now required to acquire a city permit, which would cap the number of units and set a maximum number of 60 days a year for a unit that can be rented if the owner isn't on site. So that throws a crimp in this. Airbnb spent about $4 million opposing the measure, and I understand that across the river there's a lot of big-time New York hotel type.
There are, but
on the other side of the, there are vested interests on both sides.
Absolutely, but this is distinctive because as you point out, Airbnb spent $4 million for this thing,
The campaign,
where the hotel industry spent $1 million. And what did they get for their money? An 86% majority that voted for this thing.
Listen, I'm a landlord.
I'm
a landlord. I can totally get it. I totally get why you want to cap these things, because the amount of stuff that you get. By the way, incrementally speaking, I know that Brian Chesky, the founder of Airbnb, was just on with Andrew Ross Sorkin at DealBook, right? But the news flow for Airbnb over the last 6 to 9 months has been pretty much nothing but negative. So you got to wonder, if you're a voter in a city who's going up against Airbnb, you're probably saying, "Oh my gosh, I heard about that," and then that was the reason.
But this does not ring a death knell for Airbnb. You can still operate it, but I think what's interesting here is Airbnb knows it has to take major steps to crack down on party houses, wherever there's just that shooting at an Airbnb. And this is a company that's going to be more successful over the long run if they make sure that people who are renting their apartments out for Airbnb are not frustrating and annoying their entire building. So I think this is a part of a long-term plan to work with regulators.
Joe, would you put your house on Airbnb? I've been to your house before, so I know.
I've tried to figure out what I'd rather do. Have someone staying in my bed or me staying in someone else's skeevy bed, and I don't want to do either. I'm sorry, I don't.
I don't think you're the target audience for this.
Fine. And is it Sadie Hawkins, or who did you say?
it is Sadie Hawkins. That's right.
You know who got it right? Another guy who knows.
Somebody else in the ear there telling you the thing?
The big boss. The big boss is watching and knows that it's Sadie. All right, topic 4. High five. We did it. Good job. We're all on the same. Anyway, topic 4. Costco teaming up with Instacart to test delivery of prescription drugs to its members. Delivery will be free on orders that cost $35 or more. And the fastest delivery option is 1 hour. The move comes as Costco is ramping up competition with Amazon and Walmart, both of which have explored prescription delivery in the past year.
Why do I need my prescription drugs in an hour?
Are you kidding? I think this is genius.
It's absolutely.
Have you ever been with a sick kid in a pharmacy? Let me tell you, no one wants to wait in a pharmacy
or
with
if you're older and can't get out as much.
Maybe if the mood strikes.
How much demand?
What are you trying to say,
Will
Joe?
there be for that? Just ignore the host,
I think anyone with a parent who's ever had to take a kid from the pediatrician to the pharmacy this is, I mean, I would do this all the time. I also like ordering things online. I get my groceries from Amazon.
Groceries I get, but a prescription drug, there are going to be restrictions on that because you're going to have to be at least 18 years or over. You're going to have to show ID. The person delivering it has to be
trained,
certified to be able to deliver these things. I mean, we're talking about some major costs in here that are going to be invoked.
Hold on a second. Courtney's got something about Tiffany. We have a market flash. Let's get to Courtney Reagan for a market flash.
Hi, Joe. Yeah, that's right. So we have some headlines here crossing from Reuters citing sources that Tiffany's board has basically said, look, the LVMH offer to acquire the company is too low at $120 a share. Reuters reporting the exact price that Tiffany's would like to see cannot be learned, but $120 is too low for them to open the books and let LVMH take a look. You can see shares moved higher on this news, and shares right now are sitting above $120 at $125 a share on this news. Joe, back over to you.
Okay, Courtney, thank you. Is everything okay?
You know, they replay this on Twitter. I cannot wait for the replay.
You just apologize to Julie and I go, thank God it's just us.
Yeah,
you do know there's cameras.
Have we done the last topic yet?
Let's do it. Topic 5. CNBC's Todd Hazelton uncovered something as he was testing Amazon's new Echo Buds headphones, a hidden feature that could help track workouts. When paired with the Amazon Alexa app, he found a fitness profile section that prompted him to say, Alexa, start a workout. And when he did that and walked around the office with the Echo Buds in his ears, Alexa tracked his workout time, the distance he walked, his speed, and his step count. And apparently it didn't do any heart rate yet, but it seems like this is all ready to go.
The interesting part about it, it's teed up and ready to go. It's not available to everybody, so he kind of stumbled upon this. But I'm thinking to myself, wait, I didn't really get surprised by it. I think they're all tracking us, aren't they? My iPhone does. Anything I put on me does. My watch does. Everything that I could possibly have on these. It's already been doing it for so long.
But I think it's really interesting. And you had Fitbit just acquired by Google. You have growing demand for data about health. You have the Apple Watch doing that. Obviously, iPhone can track your steps. But I do think there's this question of if your earbuds are doing that, what else are they recording? I mean, are they recording and listening? What's going on? And
all those devices in my house are all recording.
Is there full transparency about all the data that's being collected? That's what I would want to know.
Do you have earbuds? Do you have earbuds?
I have the regular iPhone ones, but I have to put them in reverse ears.
But you don't have the pods, the freestanding ones or the ones with cords on them?
I have the freestanding ones, Dom. Why? Is that a big shock that I have moved into the future?
I don't.
You don't?
I think I lose them all the time. I would think I lose them all the
time. I'll tell you, it's amazing that you do.
What scares me is when I walk across a grate, because they don't, down in New York City, where you walk across, you can lose those things. They fall out very easily, Bill. I actually have found out that there are sweat glands in your ears. Did you know there are sebaceous glands there? So they fall out, and I need to switch them around. But the new ones...
Is this a result of climate change?
It's just because of climate change, too. Partly because of the sweating.
Julia, do you use the AirPods or do you use like corded ones?
I had the AirPods, and then someone told me that the doctors were looking into potential risks of having like the cellular signal go into your ear. So I don't know. I have both.
I still have the corded ones.
The new ones have 3 different sizes because the one size fits all.
Well, they're also noise canceling, right? So they have to block it all out
as well.
You know what they say? Time flies when you're having fun, and it goes really slow when you're not.
Is this you're not having fun? Honestly?
Oh, did I say that?
No, I don't know.
This has really been great, Joe.
Yeah, thank you. It's been real and it's been fun. It's been real
so
fun. All right, thank you, Grandpa. Anyway, we got Bill Griffith, Dom Chu. Thank you, Julia. CEOs just broke a record for leaving their post. We have new numbers on the stunning turnover in the C-suite when we return.
The problem with traditional cotton sheets is that they trap heat and moisture.
Do you really expect my mother to sit on that?
Bathroom in need of a festive fix-up? Get to B&Q. We've all you need to get ready for the in-law invasion. From simple solutions like shelving and storage to essentials like the Diane soft close toilet seat for just £25. Bring the magic home with B&Q.
This is the sound of festive fun in London. You want to keep your savings for the things you love this Christmas, not a new boiler. We're with you. So our boilers come with 2 years interest-free credit to keep your savings for a Merry Christmas. You'll get a 5-year British Gas warranty, and now we can quote by video call evenings or weekends. Get a quote by the 30th of November and get £150 off a new boiler, or £450 off for existing home care customers. Search British Gas New Boiler. Conditions apply.
In the dictionary, a podcast is this:
A digital audio file made available on the internet typically is a series of which new installments can be received by subscribers automatically. But on TuneIn, a podcast is this.
I'm Adam Grant, and this is Work Life, my podcast with Ted. We study how to make work not suck.
And it's defined like this.
Blackout is a suspense-filled thriller from Endeavor Audio and Q-Code.
From news, sports, to pop culture, comedy, and beyond. Define your own podcast possibilities on TuneIn.
This is not a commercial. This is a reminder. With TuneIn Premium, you could be listening to more music commercial-free. Get over 45 commercial-free music stations. Visit TuneIn.com/premium to upgrade.
The Better Network is now on TuneIn. This is Brent Musburger. Search the Better Network. That's the BETR Network. And then let us get you better prepared to better enjoy the day in sports. The NFL, college football, basketball, hockey, baseball. Sharpen your edge. The Better Network is now on TuneIn. Be better informed. Be better prepared. Search the Better Network. That's BETR.
Welcome back to the exchange. The CEO exodus continues, reaching a record last month. 172 chief executives left their posts in October, according to a new report by Challenger Gray & Christmas, and that brings the total for 2019 to 1,332, making it the highest January to October total since the firm began tracking this info in 2002. McDonald's, Under Armour, two of the high-profile companies that have lost their CEOs in just the past 2 weeks. The report also says that most CEO departures this year were from companies in the government and nonprofit sector. Telecom was the second highest. Financial companies came in third. All right, coming up, hidden in Elizabeth Warren's new raft of taxes for healthcare is a bombshell for investors. We're going to tell you what it is and how it could impact the 1% and others also in the markets. That's up next.
When I lost my sight.
The nights have started to draw in, and at DFS we know that can only mean one thing. Everyone's spending more time at home getting nice and cozy. You can't beat it. That's why our autumn-winter collection sofas are handmade to order for complete comfort. And many are guaranteed to be delivered in time for Christmas. So make sure you come home to a sofa that's perfect for you. DFS.
Whether you're waiting for a train or a takeaway, with Tesco Mobile you don't have to wait for a brilliant deal. Our best ever Black Friday event is on. This week you can get a Samsung Galaxy A50 for just $17.49 a month. That's our lowest ever price. Get yours by the 10th of November. Tesco Mobile. Every little helps.
Best ever Black Friday based on range of products in promotion was £18.99, now £17.49. 36-month credit agreement, rolling monthly usage agreement, subject to status, phase policy applies. See tescomobile.com/terms.
This is someone making an online booking at Ford.co.uk using the words Ford20 so they can service their Ford for £20 less. And this is someone who didn't get their Ford serviced. You see, at Ford, we use Ford genuine parts and Ford-trained technicians. Plus, if you quote Ford20 when you book with us online, you can receive £20 off. Book now at Ford.co.uk or visit your local participating dealer. Ford service. No one knows your Ford better.
Retail customers only. At participating Ford dealers. Cannot be used with other promotions. T's and C's apply. Search Ford service for more information.
Pulled into the end zone, and he's yanked in by a lineman for the touchdown.
NFL fans, hear every live game on TuneIn Premium.
It's gone into the end zone. Seahawks win. Touchdown.
This Thursday, hear the home and away call as the 4-5 Los Angeles Chargers visit the 4-4 Oakland Raiders at 8:20 p.m. Eastern.
15-10, 5, touchdown, Denver.
At home or on the go, hear the home and away call of every NFL game this season on TuneIn Premium. Upgrade today.
Like what you're listening to? Want to make getting back to it easier? Use the favorite button to keep track of the stations and podcasts you love on TuneIn. Just tap or click the heart icon to add it to your favorites. Then find all your go-to audio under the Favorites tab. Pretty easy, right?
Want to know what's happening in right now? The latest headlines are just a tap away with Fox News Talk on TuneIn. When news breaks, get up-to-the-minute coverage on developing stories from around the world. Plus, hear all the Fox shows you watch on your TV. Listen to Fox News Talk around the clock on TuneIn.
Welcome back to the exchange. Elizabeth Warren's distaste for the wealthy is not a secret. She keeps finding more ways to tax them. Her latest effort could be the most painful one for the markets, yet Robert Frank is here with what she's proposing now. Tough to implement. I just...
Yeah, this one gets complicated. Let's explain what it is. Warren plans to raise over $2 trillion a year for her Medicare plan from a new tax on capital gains. Now, she's proposing that the annual tax on the appreciation of an asset, even if you don't sell it. So right now, you only pay capital gains tax when you sell an asset that's gained in value. But under her tax, if you own 100 shares of Apple, which is about $100 in gains this year, your gain would be $10,000. The tax on that right now would be $2,400 if you sold them. But under Warren's plan, which also increases the capital gains tax rate, you'd have to pay a tax of $3,700 on your Apple stock, even if you didn't sell a single share this year. Now, Warren says the tax would only apply to the top 1% of households, and it would exclude retirement counts. But as she says, ultra millionaires and billionaires won't be able to earn income on giant fortunes year after year without paying a penny in taxes. So this is a tax on unrealized capital gains. And by the way, if you have a loss, you can carry that forward into the next year, so there is that. But can you imagine every single year having to be taxed on your annual gain?
I mean, all bets are off, I guess, because we're not taxing income at this point. We're taxing actual assets.
This is on top of her wealth tax.
Right, which is also not taxing
a tax
income,
on assets. So that's right.
So what if Apple goes down the next year?
Yeah, and then you have a loss, which you can carry forward to the next year.
Yeah, but you don't. You've already paid the.
You've already paid the taxes, but you would pay less.
What about
taxes.
businesses? What about illiquid things?
So it's unclear whether she's talking about including illiquid assets, private companies, houses, real estate, and that stuff. So we don't know. Right. The Ron Wyden plan is just financial assets.
Is Dino a thing, like a rhino? Do you know? Let's bring in. If Heidi goes for this, then I don't know. The sun might come up on the west tomorrow. Senator Heidi Heitkamp, she's from North Dakota. Is Dino a word? Senator, you're very reasonable, Senator Heidi Heitkamp, a CNBC contributor, and that's said in the nicest way, Heidi. Don't take offense to that.
It's good to see you working in the afternoon, Joe.
I know. You can tax me on whatever and then maybe I won't work anymore if you're going to tax. And Dan Mitchell, co-founder of the Center for Freedom, and real good. Okay, you betcha, Heidi. Heidi, you can't. This is not going to work. This is ridiculous.
Well,
come on.
This is being written by someone who never administered tax, and I think your viewers who see us quite a bit know that I used to be the tax commissioner in North Dakota responsible for administering taxes like this. I don't know how it works in real life. The taxable event has always been realizing that capital gains in one way or realizing the loss and then taxing it at that point. This is consistent with a lot of discussion about capital gains. I do not disagree with increasing the rate. Maybe I wouldn't go to ordinary income, but I definitely think that it is unfair to working people that if you make money on your money, you're taxed at a lower rate than if you actually go to work every day and work at the factory. So I think that you have to bifurcate her plan, which is looking at this idea that you're going to tax it whether you realize the gain or not. That will never fly, and it will create incredible hardship for people living on fixed income and on savings and expecting that dividend income and expecting to actually have something at the end of the day to pay the retirement bills.
Right. Dan, I'll get back to Senator and needle her a little bit about. Maybe you ought to jump in the ring. So, I know you got this lucrative CNBC contributor thing going, but you need you need someone with some grasp of the real world to run on for your party. I don't know if you have that yet. Anyway, Dan, what do you make of that?
I think it's a bad idea to have a higher capital gains rate, period. But to actually require people to pay taxes on unrealized capital gains, not even France does that. Greece doesn't do it. No country in the world does it. I assume, I sometimes wonder, does Warren actually have stock in tax accountant shares or something like that? Because the only people who will benefit will be the people who prepare tax returns. This is a complicated nightmare that will be very, very bad for growth. Why on earth do we want to increase taxes on investment when every economic theory, even socialism, agrees that's a precondition for higher wages and more jobs?
It's in there, Robert, but what is the real... it's funny because people that are supporting Senator Warren who are capitalists, et cetera, they say, oh...
You think they are?
No, some that are. You know the kind I'm talking about.
Yeah.
I don't understand it a lot of times, but they always come up with, oh, that would never pass. She doesn't. They always come up with ways of saying... I support it because the stuff she's talking about is never going to happen.
There's what I call the pivot pipe dream, which is that she's going to pivot, or that secondly, the one part of all of her agenda that clearly can't pass without Congress is the tax piece, and that's the answer to these taxes. But if you look at the wealth tax coupled with this, why would anyone save or invest anything? Because by the time you take the wealth tax, which is either 2% or 6%, on top of taxing unrealized capital gains at more than a third, there's nothing left at the end of the year if you invest anything.
Right. Senator, you go ahead. When you walk around Cambridge, do people... you're way too... I mean, you don't fit in up there, do you? I mean, you're political... you go incognito?
Well, no, I try and recalibrate everyone and kind of introduce the real world.
Doing God's work.
Which is interesting. But I do want to make a point.
Go ahead.
Which is that because of stepped-up basis, a lot of capital gains is never taxed. And that's a whole different issue. I know Andrew talks about it. And that's one of those equity issues. The other thing I would say is we have a growing and very dangerous wealth disparity and income disparity in this country. And I know you guys have been talking a lot about wealth taxes and how this isn't going to work, but you need to come up with an alternative for how we're going to make the system more equitable.
We need to not just cap the successful people. We need to make sure that the money that we get from these people actually does something useful to try to raise up the bottom. I mean, it's not enough to just narrow the wealth gap by, is it, Dan? Just bring down the top and then just come what may?
I don't think you help poor people by punishing rich people. If we want to help poor people, and that's a great idea. I don't care about inequality. I care about poverty. So if we want low-income people to benefit, why aren't we doing things like Sweden and Switzerland and the Netherlands have done? Have some sort of private social security system so they can actually build wealth. Why don't we lower taxes and reduce the burden of government regulation and red tape? I mean, all throughout human history, all throughout our history, all throughout the entire world, there's a very clear relationship. The bigger the burden of government, the worse it is for ordinary people. And I just think Elizabeth Warren's class warfare is going to be very destructive for the people she claims she wants to help.
Senator, you got to hold this off for come on the next time, or I know we'll see you again very soon. I'm sorry, but they're telling me we got to go. That's going to be is that okay? You're all right? Yeah. We got to go quickly. Coming up. Thanks, Dan, and thanks, Robert. Coming up, Kim Kardashian, I never knew I would really say that, weighs in on whether it's time to get rid of the like buttons on social media.
If you're on Medicare...
It's another Wednesday evening, yet another cold day. So ditch the British winter and chase the sun across the globe with British Airways from London Gatwick. Reach the top of Mount Teede or relax on a sandy beach. Fly from London Gatwick to Tenerife with British Airways, with flights and 7 nights hotel from just £349 per person. Don't miss out. Book by November the 12th at ba.com/wintersun. With British Airways, incredible is within reach. Booking fees and conditions may apply. Limited availability. Selected flights in March.
In the dictionary, a podcast is this: a digital audio file made available on the internet, typically as a series, of which new installments can be received by subscribers automatically. But on TuneIn, a podcast is this.
I'm Rachel Martin with David Green, and this is Up First from NPR News.
And it's defined like this.
Ladies and gentlemen, welcome to the show.
From news, sports, to pop culture, comedy, and beyond. Define your own podcast possibilities on TuneIn.
Get social with TuneIn. Follow TuneIn on Facebook, Twitter, and Instagram to discover what's happening in the app and around the world. Be the first to know about upcoming games and the hottest new music. Follow at TuneIn and always be in the know.
Ah, finally another commercial, said no one ever. Visit TuneIn.com/premium to upgrade now and get over 45 commercial-free music stations.
College football is live on TuneIn. Listen for free to games from more than 140 schools all season long.
To the 10, all the way to the checkerboard.
This Saturday at 3:30 p.m. Eastern, number 1 LSU is taking on number 2 Alabama with a battle between LSU's quarterback Joe Burrow and Alabama's QB Tua Tagovailoa. Both are potential number 1 picks in the NFL Draft. Listen to every call and every game of your school all season long for free on TuneIn. Just search college to listen today.
In the stock market and in life, everything can change from 1 minute to the next. Be the first to hear the latest money news and market trends with CNBC on TuneIn. Wherever your day takes you, listen to CNBC's full slate of programming, including shows like Fast Money, Squawk Box, and Mad Money with Jim Cramer. And when the next big business story breaks, CNBC lets you know with live updates and commentary. At the office, at home, or on the go. Search CNBC on TuneIn to listen.
Earlier this year, Facebook began testing a version of its platform in Australia where the likes and reactions, such as hearts and other emojis on posts, will be visible only to the authors of the post. Turns out they may have some high-profile fans of that idea. Kim Kardashian is speaking with our Andrew Ross Sorkin right now at the New York Times DealBook Conference. She had this to say.
The location, more for privacy. Right. But as far as mental health, I mean, it's something that, you know, I think taking the likes away and taking that aspect away from it would be really beneficial for people. And I know that the Instagram team has been having lots of like inner conversations with a bunch of people to get everyone's take on that and is taking it really seriously. And that makes me happy.
Do you read all your comments?
I do not. But I find myself to be...
Wow. I need a screenshot. That does it for the Exchange. Power Lunch starts right now.
Joe, nice to have you here in the afternoon with us. Come back soon. Welcome, everybody. I'm Tyler Mathisen. Here's what's new at 2 on Power Lunch. Uber unlocked. Shares hitting a record low as insiders are given the green light to sell the stock. We will hear from an early investor about whether or not he is holding on for the ride. Plus, there are fewer than 50 days until Christmas, and Wall Street is concerned about a retail apocalypse. We've got the details about that, and later, it's been choppy waters for Royal Caribbean, but the stock is cruising higher. The CEO will be here for an exclusive interview as Power Lunch starts right now.
And welcome to Power Lunch. I'm Melissa Lee. Let's take a check on the markets right now. The major averages are recovering somewhat after falling in the red on reports of a delayed trade deal. We've got the Dow and the S&P 500 marginally higher right now. The NASDAQ is down by 1/3%. The Russell, taking it the hardest, down by 0.4%. Let's get over to Bob Pisani at the New York Stock Exchange for more. Bob.
So there have been reports, Melissa, that there's no clear deal yet over the terms of even a phase 1 deal with China, or even whether President Xi is going to come to the U.S. if there is a deal. So we have the usual, in the middle of the day, trade-related names that are a little bit on the weaker side. So industrials, there's your classic one. Caterpillar, 3M, United Technologies, they were all new highs yesterday. They're down a bit today. It's some of the semiconductors like Micron, NXP, Xilinx, NVIDIA, also a little bit weaker. But as you mentioned, coming off of their lows, and we had a buildup in crude. That knocked down oil. We got the weekly crude reports, but oil stocks were already weak. Remember, they had a 5% rally in the last few days, and that's helped a lot for the market overall. But the market's flipped back to the defensive names. So out of favor consumer stocks, Tyson, Smuckers, Colgate, Kimberly-Clark, as you see, all higher today. Let's just call this a pause in a rotation. The fact is that consumer staples, those consumer names, they were strong in the middle of the year, and they're all well off their highs. Remember the old market leaders, Starbucks, McDonald's, Disney, Nike? Well, recently those stocks have been down 6, 7, 8, 9%. Tyler, back to you.
All right, thank you very much, Robert. And whether you want to believe it or not, the countdown to Christmas is on. 49 days to go, and UBS is out with a bit of a holiday warning, saying the online retail takeover may leave many malls empty this season. With us now is the person behind the UBS report, Jay Soul, and also with us is Liz Dunn, founder and CEO of Proforma. Welcome to both of you. Jay, since you wrote the report, you get to go first. Okay. This is a story we've heard before, that it's going to be the end of mall retail, it's going to be the end of department stores, and yet a plucky few seem to persist.
Right. Well, Tyler, we're not saying it's the end of malls, right? What we are saying is we're going to continue to see consumers spend more of their Christmas dollars online than in stores. And so the disruption that we've seen, we haven't reached equilibrium between stores and online. So as we go forward, we're going to continue to see some pressure on companies that are really dependent on brick and mortar retail because the consumer is increasingly choosing to shop online.
Are there some retail stores, physical stores, that are going to do better than others in your view? And what are the differentiators between the ones that will and the ones that won't?
Well, I think that the stores that really can offer some unique experience that you can't get online, like if you've been to the Nike store on 5th Avenue on 52nd Street, it's a tremendous experience. You can go and you can try things and see things and learn about the product in a new way and just, use your hands and touch things. You can't do that online. Those type of stores and companies that are creating those type of experiences that you can't replicate online are going to have more success.
Liz, you look for a pretty good retail season. React to what Jay just said.
Yeah, I don't disagree that the mall is not a place to be, and most of the mall-based retailers are under significant pressure. I think you have to have product, service, value, and experience/engagement, and many of the mall retailers don't have anything differentiated on that front. I think that there are some brick and mortar retailers who are going to do quite well, but they're doing well with an integration of their online and store platforms.
Let me guess, that would be a Target, that would be a Walmart, that might be a TJX.
Yeah, Target and Walmart, certainly in terms of the integration between their online and offline presence and that, kind of multi-channel experience, buy online, pick up in store, and they keep pushing the offer, the type of things that they're offering now. Walmart's offering a subscription for grocery delivery, things like that. You can get things same day, next day. And so, and then TJX is really value and product. So not so much the multi-channel integration.
Jay, a lot of mall operators are looking to put in things like gyms and cinemas. Is that going to help with foot traffic at all if you're a Macy's or a Nordstrom or one of these typical anchor stores? You yourself in your report said that a lot of people are going to the malls for the food court.
Yep.
They get hungry, maybe they'll pick something up at the same time?
Well, yeah, I think that's the idea. As long as you can get people to the mall, they're probably going to buy something. Retail is a very much impulsive type of activity where people buy things just because they're there. They might not have planned on it. And what we see in our research is people, do want to have things to do. They want to go to the food court. They might want to go visit some other activity that's going on at the mall. They might just want to go hang out with their friends. That's what they're saying. So if a mall can come up with ways to bring people in, whether it's a gym or some other type of, activity that draws them in, that's a good thing. And that's going to help everybody else in the mall.
I'd like to get both of your takes on this American Dream Experience Mall that it's out near the Meadowlands, or what's now known as MetLife Stadium, which is ultimately an amusement park that has some stores attached to it.
Well, Tyler, you've got it exactly right. I mean, people are talking about this American Dream, and just to remind people at home, it's about 4 million square feet. It's one of the biggest malls that anybody's ever seen, but it's not really a mall. Think of it as like Universal Studios with super high-end stores. I think we're seeing the future of retail here because it's the kind of place when you walk in, you're going to say, wow, I've never seen anything like this. And any retail...
Have you been in it?
Yes.
Yeah.
Any retail destination that can do that is going to have success. They're going to bring people in. They're going to have a chance to be successful. To Liz's point, not a lot of malls have that wow factor when you walk in. This place does.
Yeah. I would say, the last thing New Jersey needs is another mall, but this is not another. New Jersey is, I think, the most overmalled state in the country. So, but this is an experience, and it's really about driving people to the destination. I was talking to a retailer last week who said they have a store at Disney World, I believe, that does $10,000 per square foot, which is phenomenal, and multiple of any other store that they have. And so it's that kind of thing. Is if you can get people in this engaged experience where there's product that's relevant, maybe they'll transact. But it's not going to increase the overall spend in New Jersey malldom. It's just going to come from somewhere else.
Liz, we want to get your take on this Reuters report that Tiffany's board is going to ask LVMH to raise its offer. The offer was previously reported at $120 a share. They're going to ask for $140. Is that realistic? I mean, do you think that LVMH would be willing to bite?
Yeah, I hadn't heard the 140 yet. I had heard that they rejected the 120. I think the stock, where it traded immediately when this was announced, showed that the market believes that the company's worth more. And I think that LVMH, it makes a lot of sense. The deal makes sense. I think they should raise their offer. I can't say if 140 is the right number, but 120 was certainly too low. Seemed too low to me.
Oh, we're going to leave it there, guys. Thank you very much. Well, I have a feeling we're going to see both of you probably between now and Christmas.
At least in the next 48 days.
In the next 48 days. Liz, Jay, thank you very much. Appreciate it.
Love your countdown clock.
We've got a news alert on Facebook. Julia Borson's got the details. Julia. That's right. Facebook has been investigated by California's Attorney General's office for 18 months. Right now, California's AG Javier Becerra is holding a briefing. He said in a filing earlier today that Facebook has failed to comply with its subpoenas for more information on the state's investigation around Facebook's business practices. Those include its practices around privacy, disclosures, and third-party access to user data. The AG's office looking to understand whether the company has violated any laws. Attorney General Becerra is asking the San Francisco Superior Court to require Facebook to comply with its subpoenas for additional documents. We have reached out to Facebook for comment and have not heard back yet. You see here that press briefing is ongoing. Facebook shares trading down a bit over 1%. Back over to you. Is this part of the investigation, Julia, where there are multiple state AGs, joining together?
This is separate. Now, there are, I believe, 47 state AGs who have joined together for an investigation into Facebook. California was not part of that. The California Attorney General had been asked if they were participating. They said no comment. And now we are learning that the California Attorney General has been looking into Facebook's business practices for 18 months now. And he just said in this press briefing that the reason why he's talking about it now is because Facebook has not complied with their request for data. And now they're looking to get Facebook effectively to be forced to hand over some of those documents they're looking for.
All right, Julia, keep us posted. Thank you, Julia Borston. Facebook shares are down 1.2% now. Still ahead on Power Lunch, with markets near record highs, a number of big names are sitting out the rally. Is it time to start buying the laggards? And shares of Uber sinking to a record low today as its lockup expiration expires. We'll talk to an early investor about what he is doing next.
Only one thing's more exciting than getting a Lexus: giving one.
It's another Wednesday evening, yet another cold day. So ditch the British winter and chase the sun across the globe with British Airways from London Gatwick, and relax with 365 beautiful beaches.
So yes, sir, what would you like to have?
Fly from London Gatwick to Antigua with British Airways from £223 each way based on a return fare. Don't miss out. Book by November the 12th at ba.com/wintersun with British Airways. Incredible is within reach. Booking fees and conditions may apply. Limited availability. Selected flights in March.
Oh, these walls are definitely on my naughty list.
Want your walls to be merry and bright? Get to B&Q. 2.5 litre Good Home Durable Matte Emulsion is just £16. And being wiped clean, there's no need to worry about mucky little mitts this Christmas. So why not add some festive cheer and impress your guests too? Bring the magic home with B&Q.
Want to know what's happening in right now? The latest headlines are just a tap away with Fox News Talk on TuneIn. When news breaks, get up-to-the-minute coverage on developing stories from around the world. Plus, hear all the Fox shows you watch on your TV. Listen to Fox News Talk around the clock on TuneIn.
College football is live on TuneIn. Listen for free to games from more than 140 schools all season long.
To the 10, all the way to the checkerboard.
This Saturday at 3:30 p.m. Eastern, number 1 LSU is taking on number 2 Alabama with a battle between LSU's quarterback Joe Burrow and Alabama's QB Tua Tagovailoa. Both are potential number 1 picks in the NFL Draft. Listen to every call and every game of your school all season long for free on TuneIn. Just search college to listen today.
The Better Network is now on TuneIn. This is Brent Musburger. Search the Better Network. That's the BETR Network. And then let us get you better prepared to better enjoy the day in sports. The NFL, college football, basketball, hockey, baseball. Sharpen your edge. The Better Network is now on TuneIn. Be better informed. Be better prepared. Search the Better Network. That's BETR.
Today marks the first day that insiders and early investors can sell their shares in Uber. The stock has had a bumpy ride since its May IPO and is down now about 40% from that point. Uber, just one of this year's many high-profile companies underwater since its public debut. Have these unicorns turned into donkeys? Are they donkey corns? Deirdre Bosa has the story. Hi, Deirdre.
Tyler, I'm not sure, but you got to say that not all unicorns or donkey corns, are created equal. Now, at one end, there's WeWork. We know how that went from $47 billion valuation to $7.8 billion. This is a major black eye for SoftBank and Masa-san, of course, the force behind some of today's biggest unicorns or donkeycorns. Now, that write-down led to SoftBank's first quarterly loss in 14 years. Higher on the spectrum is Uber. It also weighed on SoftBank's earnings and Masa's reputation as a VC investor. At DealBook today, CEO Dara Khosrowshahi made sure to say, "We're very different than WeWork." But it is another massive SoftBank Vision Fund bet that has gone from $76 billion valuation in private markets to worth $45 billion today in the public market. Our Andrew Ross Sorkin asked Khosrowshahi, what's happening to the unicorns of Silicon Valley?
The world around us, everything going on in politics, the global landscape has fundamentally changed over the past 2 years. And I think that the appetite for the unknown and high risk in the public markets, it's just gone down. And that has consequences.
Now, others may argue, though, that markets have actually been good to some unicorns. There are those that are on the other end of the spectrum or continuum, as CEO Brian Chesky of Airbnb called it this morning, also at DealBook. Startups that are profitable or closer to that benchmark with more solid business models. They may look less like donkeys and more like unicorns. So Airbnb will be an important marker of that. Guys, back over to you.
All right, Deirdre, thank you. Deirdre Bosa in San Francisco. Uber shares sliding around 4% as a lockup for insiders expires. Should those early investors take their gains today and run, or does Uber have a prosperous road ahead? Let's ask one. Steve Jang is an early investor and advisor at Uber. He is now the founder and managing director of Kindred Ventures. Steve, great to have you with us.
Thanks for having me.
First question I got to ask, did you sell any shares of Uber today?
No, I did not.
Do you plan on selling them going forward?
With any sort of early venture capital investment, there's always a distribution schedule. There's always a diversification schedule after going public, and that's pretty normal for all investors. And so, I think myself and other investors will constantly do that over time, but I think this would be not a good time to do that. I think that the stock is undervalued. I think the company went public in an environment where there was a lot of macro issues, as well as a lot of an argument between private tech markets, investor markets, and public tech investor markets. So I think that the valuation argument is still playing out. And on the other side, just looking at the company itself, it's going through a rite of passage, which is once you go public, there's sort of a fitness on what the market wants in terms of metrics to understand the business and model it out and really get into the details. And there's also a lockup expiration. And all these things are sort of normal things that happen to public companies like Facebook or Twitter. And you're seeing that play out now.
Why do you think there is such a disconnect between what private investors were willing to hear in terms of the information, the metrics, et cetera, and what the public market investors wanted? Why was there such a gap?
I think that in the private markets, we had an influx of venture capital coming from a lot of late stage or even some public institutional capital. And so, I think in that mindset, there was an idea that you could do sort of a pseudo IPO at these late stages. And I think valuations were, admittedly, the entire market was very optimistic and aggressive about it. And I think the macro climate changed this year, especially this summer, with a lot of the tariff wars and all companies across tech sort of getting hit. And I think there's also been a public opinion sway about really scrutinizing what are these public tech companies. And so in the midst of all of the social, political, and economic upheaval in the markets, private valuations from last year or even the year before that, compared to public market valuations this year, there's a disconnect. And so I think that's going to get played out, and that's going to normalize like it always does in the markets. And I think Uber is going to be a company to watch there, and Dara and Nelson are doing the right thing. And I think in this last earnings call, they showed more metrics so that each business unit could be understood. They're showing 30% year-over-year growth. The company is growing in a healthy way. They're the market leader in ride sharing and delivery and making the most comprehensive investment in new technologies such as Uber Elevate, Uber Freight, Uber Health. And they have the largest international expanse in terms of market share. They have significant ownership in Didi, in Yandex, Careem, and Grab in Southeast Asia. So they're the largest global network in ride sharing and delivery by equity assets, as well as revenue, as well as customer base. So I'm holding for the long term, and that's why I'm excited.
Very quick question, if I might. Has what's happened to some of these former unicorns, is it going to change the appetite for these companies to go public? Why would they do it if they hit a banana peel when they do?
I think it's hard to predict what the overall larger market, global market, will be doing when you start a process to go public. We at Kedra Ventures, we invest so early as the very first institutional fund money in startups at day zero. A lot of these things play out over 8 to even 15 years. And so when you're ready, you're ready. When you need to go public because of shareholder frameworks and the capital needed and the ability to create liquidity for your investors, you should be able to be in the fitness as a company to go public regardless of those markets. I mean, there's some edge cases. And so I think it just puts the bar higher in preparation. I think the lessons learned might be, figure out what the metrics are that the market wants in the public markets before going public. Right. I think some of the other things too might be look at direct listings in situations where you may not need a large sum of capital upfront. Now, Uber did the right thing in doing an IPO because now they have $12.7 billion in cash and cash equivalents. So in terms of a war chest, they're also sort of the leader there globally to be able to do that. And so I think a lot of new factors from this year are going into the thought process in an IPO.
All right, Steve, thank you very much. I love that blue bottle of coffee. I had one across the street from where you're sitting the day before yesterday.
One of our best portfolio investments,
Oh, boy, it's good coffee. Steve Jank, thank you very much. And Winnebago shares have doubled this year, and the company is holding its investor day in New York, where it is showing off its RVs. And Frank Holland is there. Hi, Frank.
Hey there, Tyler. Winnebago is known for its iconic motorhomes like these, but in 2019, a year it recorded a record profit. The driver of all that was really towables like these over here. Coming up on Power Lunch, we're going to hear from the CEO of Winnebago about the company's stock success and consumer spending. I'm Frank Holland. I'll have that coming up right after the break.
What does the word partner really mean? It's another Wednesday evening, yet another cold day. So ditch the British winter and chase the sun across the globe with British Airways from London Gatwick to see spectacular coral reefs and white sand beaches. Fly from London Gatwick to Mauritius with British Airways, with flights and 7 nights hotel from just £949 per person. Don't miss out. Book by November the 12th at ba.com/wintersun. With British Airways, incredible is within reach. Booking fees and conditions may apply. Limited availability. Selected flights in March.
In the stock market and in life, everything can change from 1 minute to the next. Be the first to hear the latest money news and market trends with CNBC on TuneIn. Wherever your day takes you, listen to CNBC's full slate of programming, including shows like Fast Money, Squawk Box, and Mad Money with Jim Cramer. And when the next big business story breaks, CNBC lets you know with live updates and commentary. At the office, at home, or on the go. Search CNBC on TuneIn to listen.
The Better Network is now on TuneIn. This is Brent Musburger. Search the Better Network. That's the BETR network. And then let us get you better prepared to better enjoy the day in sports. The NFL, college football, basketball, hockey, baseball. Sharpen your edge. The Better Network is now on TuneIn. Be better informed. Be better prepared. Search the Better Network. That's BETR.
In the dictionary, a podcast is this: a digital audio file made available on the internet, typically as a series, of which new installments can be received by subscribers automatically. But on TuneIn, a podcast is this.
I'm Adam Grant, and this is Work Life, my podcast with Ted. We study how to make work not suck.
And it's defined like this.
Blackout is a suspense-filled thriller from Endeavor Audio and Q-Code.
From news, sports, to pop culture, comedy, and beyond. Define your own podcast possibilities on TuneIn. You're listening to TuneIn, where you can hear all the audio you love in one place. Live NFL games, the hottest music, breaking news, and podcasts. Push play and go about your day, only on TuneIn.
Hey, can't watch the big NBA game because your life's just too busy? I've got some news for you. TuneIn Premium is the answer to all your problems. Hear every home and away game live or on demand everywhere you go. Just search NBA to listen.
Welcome back to Power Lunch. Shares of Winnebago have more than doubled so far this year. Frank Holland is at the company's Investor Day in New York City. Had a chance to speak with the Winnebago CEO. Frank.
Melissa, that's absolutely right. Winnebago shares rising more than 100% this year, and the company recording record profit despite sales of iconic motorhomes like these slumping 18%. The company's higher margin, lower priced towables, the models that you're going to see right over here, those have really been the driver, reporting 6% growth. Winnebago holding its Investor Day here in New York City, right outside of Central Park, showing off the latest models. We also spoke to CEO Michael Happy. He says the company's 2019 performance also shows that recession fears are likely overblown.
The weight of the American economy seems to be now a little bit disproportionately on the shoulders of the American consumer. You know, I think obviously some businesses and manufacturing environments have slowed here recently, but the American consumer continues to spend, and obviously we're a consumer discretionary company, and so we have to earn their spend. And so I think not only is there a secular strong argument for outdoor businesses, but in the short term, consumers are continuing to spend money.
When Happy says he's very encouraged about 2020 sales due in part to the Fed cutting interest rates 3 times this year, making his products cheaper. He says he also looks at consumer spending and consumer confidence as economic indicators, with the RV industry expected to see a third year of decline in 2020. We also asked him if RV sales are a reliable economic indicator. He just smiled and said, well, at least not in recent months. Back over to you.
All right, thank you very much, Frank. Frank Holland reporting. Ahead on Power Lunch, the war on wealth. Elizabeth Warren firing back at comments from Jamie Dimon. We'll bring you the latest details on that. Plus, shares of Royal Caribbean navigating some choppy waters. The CEO joins us for an exclusive interview when Power Lunch returns.
It's another Wednesday evening. Yet another cold day. So ditch the British winter and chase the sun across the globe with British Airways from London Gatwick and explore tropical rainforests. Fly from London Gatwick to Costa Rica with British Airways from £218 each way based on a return fare. Don't miss out. Book by November the 12th at ba.com/wintersun with British Airways. Incredible is within reach. Booking fees and conditions may apply. Limited availability. Selected flights in March.
Did you know BT's business broadband comes with an always connected guarantee?
Always connected? I can't guarantee that. Nobody can.
BT can.
No, it's impossible. What if a squirrel bites through your cable?
That's when the 4G backup kicks in.
4G backup?
Yup.
Oh. Well, squirrels can't bite through 4G.
Exactly.
BT Business Broadband with the always connected, squirrel-proof guarantee. BT, beyond limits. Subject to availability. T's and C's apply.
College football is live on TuneIn. Listen for free to games from more than 140 schools all season long.
To the 10, all the way to the checkerboard.
This Saturday at 3:30 p.m. Eastern, number 1 LSU is taking on number 2 Alabama with a battle between LSU's quarterback Joe Burrow and Alabama's QB Tua Tagovailoa. Both are potential number 1 picks in the NFL Draft. Listen to every call and every game of your school all season long for free on TuneIn. Just search college to listen today.
A lot of people aren't aware that TuneIn lets you listen to the same terrestrial stations that you pick up on your FM AM dial, except you can hear them from anywhere. To see all the stations broadcasting in your area, find the local radio section on the home screen. Keep it local with TuneIn.
ESPN Radio and TuneIn just go hand in hand. Hi, this is Mel Kiper Jr. reminding you that all of your favorite ESPN Radio shows and events are right here on TuneIn. Just search ESPN Radio to begin enjoying it today.
Upgrade to TuneIn Premium and get over 45 commercial-free music stations. You'll also get live commercial-free news, plus live play-by-play games from NFL, MLB, NBA, and NHL. Visit TuneIn.com/premium to upgrade.
Good. Here's a swing and a drive deep to right field. Looking up. Goodbye, baseball.
Between game-winning shots and walk-off homers, follow TuneIn on social media to discover the latest and greatest in live sports.
With the 24th pick in the 2019 NFL Draft.
From live reminders that the biggest MLB games are on the air, to recommendations of the best new sports talk shows and podcasts.
He's going to be fine. He's going to be good right away in 3 years.
Follow at TuneIn on Facebook, Twitter, and Instagram to get the most out of TuneIn.
Welcome back, everyone. I'm Sue Herrera. Here's your CNBC News update at this hour. Senator Lindsey Graham is calling for the identity of the whistleblower who spurred the impeachment inquiry to be made public, claiming it would not put him at risk.
The whistleblower statute's being abused, and I got to run in here. It's designed to protect you from being fired if you come forward. It doesn't give you anonymity. Nobody should be prosecuted based on an anonymous accusation. Impeachment is the political death penalty.
Walmart is expanding its grocery delivery service. Customers have the option to pay a yearly $98 fee or a monthly fee of $12.95 to receive unlimited Walmart grocery delivery orders right to their door. It will be available in more than 50% of the country by the end of the year. And there's some new research showing that insured Americans are paying more for behavioral health services than other medical conditions. The study of nearly 4 million people with either mental health or substance use disorders were more likely to have out-of-network care or pay more out-of-pocket per year compared with those with chronic health conditions. You are up to date. That's the news update. Ty, back to you.
Sue, thank you very much. Let's talk about the markets right now as we take a look at the Dow, the S&P, and the NASDAQ. A fair amount of red on the screen there, with the exception of the S&P, which is basically just flat. So is the Dow, down 5, almost 6 points. NASDAQ with a little bit steeper loss. You'd call that 1/3%. And the Russell 2000 down about 0.5%.
Despite these fractional moves, it got a lot of power movers today, starting with a blast to the past. Xerox making a cash and stock offer to buy personal computer maker HPQ. CNBC reporting that the companies could save more than $2 billion in expenses if they merge. Both stocks are higher right now, with HP up 9.5%. Next up, Coty, the beauty product maker, soaring 14% on a solid earnings beat. The company pointing to the strong growth of its brand on Amazon as a key catalyst. That stock's up 14%. And Diamondback Energy down 14%. The company reporting disappointing earnings results, saying its oil production declined in the quarter due to an asset sale. Well, markets are hovering just below record highs here. Dom Chu's got a look at the sectors driving the action. Which names are taking a backseat? Dom.
All right, so the good and the bad in this kind of situation, Melissa. So as we've made this run towards record highs over the course of the last month in the broader market in the S&P 500, there are 3 or 4 sectors that have really been leading the way. And one of those sectors is the industrial side of things. You can see on a 1-month basis, just looking at that, we're up about 7%, a healthy move higher. But it's not all candy and roses, because if you look at some of the defense contractors like Northrop Grumman, it's down about 7% during that same span, and Lockheed, which is down about 2%. Now, that's a reversal. Remember, these defense stocks had helped lead the way higher for much of the last year or two, been a strong component, but they're not participating in this run towards record highs. One more sector to watch here is what's happening overall with the technology and financials. Financials in particular right now, take a look at that. The best performing sector in the S&P 500, nearly 8% over the last month. However, the exchange operators, like the Intercontinental Exchange, parent company of the NYSE, also CME Group, down 7% for the CME Group, down 3% for Intercontinental. So they are not participating, perhaps because the lack of volatility really in the markets as we've kind of grind higher is playing out there. And then one more place we'll watch is technology, another top performing sector there. But again, some of those stocks like payment companies like PayPal and MasterCard and Visa underperforming the broader technology sector. Tyler, back over to you.
All right, thank you very much, Dom Chu. For more on the great rotation and what it may mean for your money in the final 40 trading days of the year, let's bring in Mark Lucchini, Chief Investment Strategist at Janney Montgomery Scott, and Michael Aroney, Chief Investment Strategist with State Street Global Advisors, where he manages more than $2 trillion. Michael joins us from the Schwab Impact Conference out in San Diego. Welcome to both of you. Mark, you're pretty positive on the market. What if I had some incremental money that I wanted to put away with a, let's say, 1 to 3 year time frame? Where would you put it right now?
Well, Tyler, a couple of the sectors that were mentioned was where we're shifting our asset allocations into and away from the defensive sectors, financials, industrials, materials, and energy. We think what we're starting to see is a rotation that is legitimate this time, unlike the last couple of times around over the last few years in which it was a one-month wonder. And the legitimacy is really being borne out by some improvement in global economic conditions. Some of those readings that are coming out of the ISM surveys or the Chinese Purchasing Manager Indice figures are indicative of perhaps some stability occurring in overseas markets, which is going to go a long way toward kind of one big trade, some softening in the dollar and improvement in U.S.-based multinationals, particularly those that are more heavily geared towards foreign markets than domestic.
Michael, let me ask you to chime in here. And it seems like you and Mark overlap in your preference right now for what I'd call basically some cyclicals, including financials and others.
So although the economy continues to decelerate and corporate profits have been falling, I think it's important to continue to have sectors of the market that can demonstrate very solid growth. So we continue to like the technology sector, the communication services sector. But Tyler, I do think you need to begin to balance that with some sectors that have been out of favor this year and are starting to respond now. And so for me, I like healthcare and financials. So we're going through what's been a fairly sluggish earnings quarter, and healthcare has been the stalwart. They've done a fantastic job in terms of revenue growth, earnings per share growth. It's an inexpensive asset, and it has some long-term structural tailwinds that should support healthcare going forward.
Mark, I wonder if you think the market is pricing in a lot at this point as we chug along at record highs here in terms of, are the markets discounting the signing of the phase one trade deal? Certainly they're discounting the Fed pretty much remaining on the sidelines because the bar is so high for them to move on rates either up or down at this point. And we've already got earnings pretty much in the books. And I ask you this because once that phase one trade deal is signed, what happens?
Well, I think you're right. I think the market has pulled forward a lot of good news on both fronts. Certainly on the trade deal, and just as the phase one is intended to be a down payment on a much broader negotiation, we know the real difficult issues, the structural issues, are yet to be grappled with, and probably will take much more than even the next year, if ever, to fully resolve. In addition to that, I think earnings expectations on a year-over-year basis, that is 2020 over this year, are expected to be up, according to FactSet, by about 8.7%. That doesn't seem unreasonable to me, given global growth expectations that we hold for 2020, and therefore, I think the market can continue to advance predicated upon the realization of those earnings. This year's story has been all about market multiple expansion and little in the way of earnings contributing, if you will, to the gains that have been had so far. So a lot of heavy lifting is going to have to be done by the earnings picture next year because the market, I think, is pretty fully valued at 17.4 times forward. So it doesn't mean the advance can't continue, albeit, though, I wouldn't be surprised if we stalled in here a little bit until investors become more convicted around that earnings growth story for 2020.
Michael, we have a lot of political winds blowing these days, not just on China and trade, but obviously with the election coming in 2020. A lot of people in jobs like yours are wary about whom the Democrats might nominate. Does one candidate on the Democratic side worry you more than any others?
I think overarching concerns about the election always get a little bit overblown, and next year could be a similar scenario to 2016, where the market largely treaded water until we got clarity on the election. But Tyler, I do think that if a progressive Democrat were to win the presidency, the markets would sell off. Now, that's not a political opinion. I think similar to what we saw in the aftermath of Trump's election, markets celebrated on the idea that under a Republican, you'd have lower taxes, less regulation, and a more business-friendly environment. I think under a progressive Democrat, the corollary would be you'd have more regulation, higher taxes, more bureaucracy, and slower growth. So I do think that the markets would react negatively to a progressive Democrat. That would leave you with Sanders and Warren in particular as concerns for the market going forward.
All right, Mark Lashini, thank you. Michael, thank you very much, and enjoy beautiful San Diego.
Well, let's get a check on the bond market right now. Rick Santelli's tracking all the action at the CME. Hey, Rick.
Hi, Melissa Lee. We've had 3 strong up days in yield, down days in price, but today after the weak productivity numbers, first negative number on productivity since the end of 2015. Markets are melting a bit. You can see it on the 2-day chart. But that sell-off certainly helped build demand for today's 10-year auction, which went very well. Look at October 1st of 10s. You see the resistance there in the mid-180s. And finally, the dollar index has been mostly downside since its almost 2% drop in October. But you see it is crawling back on this week-and-a-half chart, back up to that 98 level. It will be a very important test to see if we can jump over that level and close over that level this week. Tyler, back to you.
All right, Mr. Santelli, thank you very much. Elizabeth Warren's war on wealth has a hidden bombshell that could have a big impact on investors, what it is and what it means for markets. Next.
The Bond Report.
It's another Wednesday evening, yet another cold day. So ditch the British winter and chase the sun across the globe with British Airways from London Gatwick and enjoy stunning white sand and crystal blue sea. Fly from London Gatwick to the Maldives with British Airways from £300 each way based on a return fare. Don't miss out. Book by November the 12th at ba.com/wintersun with British Airways. Incredible is within reach. Booking fees and conditions may apply. Limited availability. Selected flights in March.
Ladies and gents, may I introduce a magical number? 25! Oh yes, 25 UK millionaires guaranteed in this Friday's Euro Millions.
Euro Millions, celebrating 25 years of the National Lottery. Your numbers make amazing happen. Rules and procedures apply. Players must be 16 or over.
Do you really expect my mother to sit on that?
Bathroom in need of a festive fix-up? Get to B&Q. We've all you need to get ready for the in-law invasion. From simple solutions like shelving and storage to essentials like the Diane soft close toilet seat for just £25. Bring the magic home with B&Q.
Want to know what's happening in right now? The latest headlines are just a tap away with Fox News Talk on TuneIn. When news breaks, get up-to-the-minute coverage on developing stories from around the world. Plus, hear all the Fox shows you watch on your TV. Listen to Fox News Talk around the clock on TuneIn.
Hey, can't watch the big NBA game because your life's just too busy? I've got some news for you. TuneIn Premium is the answer to all your problems. Hear every home and away game live or on demand everywhere you go. Just search NBA to listen.
Hey NFL fans, can't watch the game? Can't be there? No biggie. With your TuneIn Premium membership, you have unlimited access to every team and every game in the league. Listen live as it happens or on demand. Anytime, anywhere. All season long. Search NFL today.
Couldn't. Here's a swing and a drive deep to right field. Looking up. Goodbye, baseball.
Between game-winning shots and walk-off homers, follow TuneIn on social media to discover the latest and greatest in live sports.
With the 24th pick in the 2019 NFL Draft.
From live reminders that the biggest MLB games are on the air to recommendations of the best new sports talk shows and podcasts.
He's going to be fine. He's going to be good right away in 3 years.
Follow at TuneIn on Facebook, Twitter, and Instagram to get the most out of TuneIn.
Welcome back to Power Lunch. Elizabeth Warren continues to butt heads with billionaires. Leon Cooperman and Jamie Dimon sounding off against the presidential candidate this week for vilifying wealthy people. The Prophet's Marcus Limon has explained why this tax might not work like politicians will hope it will.
We all agree that we need a better infrastructure for our country. We all agree that we want more into our educational system. We want more for people with opportunity. There's nobody, even the wealthiest person in America, doesn't think that that's a bad idea. I think the bad idea really comes in when you start to create this line in the sand where you're going to decide who's going to get taxed and who's not, because at some point I think you're going to move the line. Today the line's at, well, if you have $50 billion or $5 billion, and tomorrow it's going to be if it's $1 million. And at the end of the day, myself and other people that have had hard work and callous on our hands don't want to be told how to reinvest into the marketplace.
But now Warren is fighting back against those billionaires. Robert Frank is here with the very latest.
It is the daily back and forth now. It just gets better. The pushback from billionaires and CEOs is music to Warren's ears. She tweeted last night The fact that they've reacted so strongly, so angrily to being asked to chip in more tells you all you need to know. The system is working for the wealthy and the well-connected, and Jamie Dimon doesn't want that to change. Now, to make them chip in more, she just unveiled yet another tax on the wealthy, taxing unrealized, yes, unrealized capital gains every year. So right now, you only pay a tax on the gain of a stock of a sale of an asset if you sell it. Now, Warren would tax the gain on that asset or stock every year, even if you don't sell it. So if you own 100 shares of Apple, which is up about $100 this year, your gain would be $10,000. You would pay a tax of $3,700 this year, even if you never sell a single share. Now, Warren says you can use losses to offset future taxes, and it would exclude retirement accounts. Warren's saying ultra millionaires and billionaires won't be able to earn income on giant fortunes year after year without ever paying a penny in taxes. Now, just a reminder, this is on top of the wealth tax, which is her tax of 2 to 6% of wealth. So this 2 to 6% of wealth plus all your unrealized capital gains would also get taxed at 37%.
Does that unrealized capital gains tax apply only after a person's income exceeds a certain amount, or does it apply to anybody who has a capital gain?
Great question. It only applies to what she says the 1%. So right now that income threshold is around $450,000 for a family. So if you make less than that, and if it's part of your retirement account, you're excluded from this tax. But any household making more than $450,000 a year would have to pay this tax.
There are so many. I don't even know where to start
on this. Yeah.
I mean, I would think that some families would have to sell their stock in order to pay the tax.
Precisely. And what's interesting also, not that we should feel sorry for Jeff Bezos and people like that, but founders would have to sell 6% of their stock to pay the wealth tax. Plus, imagine any gain, which in people like Bill Gates' case, it's like sometimes $20 billion a year. You would have to sell even more beyond what you've already sold for the wealth tax to pay it down. So you would lose control of your company possibly within 15 years or so, just paying these taxes.
What happens in 1 year if the markets are down and you've got a loss?
She has a plan for that. The plan is
tax you.
Tax you, but the good thing is you would, if you pay taxes 1 year and the stock is down the next year, you can carry that loss forward, but you don't get the money back that you paid the previous year.
What if I still have a gain on the stock? If it's just gone down in a year from $100 a share,
right?
But I bought it at 50.
Lower.
Yeah,
I was taxed when it was up at 100. Now it's lost 25. It's at 75. I've still got a $25 gain
on the basis. That's
on the
right.
basis.
Yeah, you're right.
But not from the.
So you still have to sell the stock.
Yeah.
What happens if you've bought shares in different lots?
This is why this
is a nightmare.
This is a freaking nightmare.
It's why it's the Full Employment Act for accountants is what this really is.
Yeah.
It's baffling.
And
so
mutual fund shares
But this tax alone, she needed $20 or $30 trillion from Medicare. This piece of it alone is over $2 trillion in revenue, and that's why she's putting it in there.
All right, Robert.
Thank you.
I think we'll be hearing more from you about this
every day.
and other things. All right, Royal Caribbean reporting weaker than expected earnings and lowering guidance, taking a hit from Hurricane Dorian. Shares initially sank, but have already recouped those losses, climbing about 3% in the past week. Up next, the CEO, Richard Fain, will join us to discuss in an exclusive interview.
It's another Wednesday evening, yet another cold day. So ditch the British winter and chase the sun across the globe with British Airways from London Gatwick. Experience Mexican culture and relax by the Caribbean Sea. Fly from London Gatwick to Cancun with British Airways from £275 each way based on a return fare. Don't miss out. Book by November the 12th at ba.com/wintersun. With British Airways, incredible is within reach. Booking fees and conditions may apply. Limited availability. Selected flights in March.
London, switch to Vodafone, the UK's best mobile network, and Be Unlimited, because the best phones deserve the best network and our new unlimited data plans. The future is exciting. Ready? Vodafone.
Max download speeds apply to unlimited data. Best network as voted by readers of trusted reviews. Terms at vodafone.co.uk/unlimited.
Hi, this is Brian Weber, host of NFL First and Goal every Sunday, kicking off at 1 Eastern only on TuneIn Premium. Be sure to listen this Sunday for the ultimate football fan experience, featuring 7 hours of commercial-free coverage of every scoring play around the NFL.
What if you could keep up with cable news even when you're on the go? With TuneIn Premium, you can listen to MSNBC live without any commercial interruptions. All of the news, none of the ads. Listen live on TuneIn Premium today.
The NBA is on TuneIn Premium.
He shoots it. It's good. It's a 1-point lead. They don't have a timeout.
Each week, TuneIn picks an NBA game you just can't miss.
You're off to Wiggins, straight away on the triple try. Bingo! He knocks it down at the buzzer.
The defending champions, Toronto Raptors, are in LA to take on the red-hot LA Lakers. Tip-off is at 9:30 p.m. Eastern this Sunday. Search NBA on TuneIn to follow your favorite NBA team today.
In the dictionary, a podcast is this: a digital audio file made available on the internet, typically as a series of which new installments can be received by subscribers automatically. But on TuneIn, a podcast is this.
I'm Rachel Martin with David Green, and this is Up First from NPR News.
And it's defined like this.
Ladies and gentlemen, welcome to the show.
From news, sports, to pop culture, comedy, and beyond, define your own podcast possibilities on TuneIn.
Start hearing more of what you want. Upgrade to TuneIn Premium and get over 45 commercial-free music stations, live commercial-free news, and every live NFL, MLB, NBA, and NHL game. Visit TuneIn.com/premium to upgrade.
Very large ships, I like this one.
2019, Mr. Fain, we'll get to you in just a minute. He's there chatting away because we're having a good conversation. It's been a very different year for two travel stocks, with Expedia climbing about 20% and shares of TripAdvisor sinking more than 24%. Both companies are set to report after the bell. And let's bring in Seema Modi with a check-in on the travel sector. Welcome, Seema.
Thank you, Tyler. Well, earnings so far from some of the major travel operators suggest that consumers are becoming a bit more conscientious on how much they're willing to spend on leisure trips. At the same time, there are these structural changes at play. Growing demand for short-term rentals like Airbnb continues to challenge the major hotels like Marriott, Hilton, and Hyatt. Online travel firms as well, Expedia and TripAdvisor, both set to report earnings after the bell. Now to the cruises. Royal Caribbean reported earnings last week and lowered its full-year guidance due to Hurricane Dorian, which damaged parts of the Caribbean and the Bahamas, though it did still see strength in the U.S. and China. Royal, along with other cruise stocks, have come under pressure in the past 6 months. Some analysts say that if the economy does continue to soften, cruises could actually thrive because they have more cost-effective options.
Seema, stay right here. We want to dig deeper into Royal Caribbean and the latest travel trends. Joining us aboard for our Power Lunch exclusive is Richard Fain, Chairman and CEO of Royal Caribbean Cruises. Richard, great to have you in-house.
Thank you for having me.
I want to talk about the earnings and the reaction from the street, because some people were a little put off by the quote, you highlighted certain changes in your cost base, specifically revenue-enhancing investments in 2020. What sort of enhancements, what sort of investments are these?
Well, you know, we've been making a lot of investments. We've said we have really three priorities. They are people, destinations, and technology, and we are investing in all three of them. The most recent example is our Perfect Aid Coco Cay, our private out island. And these kinds of investments we think are paying off very handsomely, very quickly, but they do involve costs to build up in preparation for them. We've spent, for example, 4 years preparing for the new private island. The technology is coming on stream. So there's a short-term cost, but the payoffs have been, I would say, delicious.
And Coco Cay is seen as a big driver for bookings during this upcoming wave season. And some analysts are saying they expect 65% will be booked by the end of wave season, which ends at the end of first quarter. Do you see that? 65% sound right to you?
Well, we are seeing a lot of more bookings in advance, and people are booking further in advance. And I think that's a sign of strength in the industry. We haven't given out those numbers, but that's the kind of number we've seen in the past. In the last 2 years, we've seen record bookings as we end the year, and I think this year we will again.
One of the benefits of cruising is you can truly customize the experience, from the type of room you want to stay in, food and beverage, whether you want to participate in on or off-board experiences. Richard, have you seen any sign that consumers are opting for the basic room versus luxury, maybe pulling back on how much they want to spend when they're on board?
Not yet, actually. On the contrary, we're seeing more demand for the better staterooms. We have upgraded our categories, so we have more in suites, more with verandas, and those are actually selling first now. You try and get one of our top Royal Suites in advance, a year in advance, sometimes a year and a half in advance, and it's difficult to get the very best cabins. I think it's really because cruising has come of age, and people are seeing cruising as a great value. We think that's why so many analysts are talking about us as being recession resistant, and it's paying off. We're seeing it great strength in America, great strength in China. Europe isn't as strong as we expected, but our pricing in Europe is still better than it was last year. So I can live with this kind of bad news every day.
How much did Hurricane Dorian cost you, and why was it such an expensive storm?
So Hurricane Dorian was a terrible storm, and it cost us about 15 cents a share, and that's a lot of money.
How many cruises did you have to cancel?
We had to cancel. We only had to cancel one, but we had to reposition because we have to stay way away from the storm.
Right.
We do a lot of things from a precautionary point of view. We also had to close down Perfect Day for 10 days. And so we had to cancel or move 16 sailings. It affected 88,000 of our guests. In our 50-year history, it's the most impactful storm we've ever had. And the reason was it had some very unique characteristics, including the fact that it just sat there 38 hours over Freeport. It must have been horrible to be there. So it affected that. It affected some of our best ships, our Oasis class ships. It also affected Perfect Day Island. And lastly, we invested a great deal in trying to give back a little bit to the Bahamas. So there was a fairly big expense in terms of relief.
Are you back in business in those destinations?
Oh, we're absolutely back in business, and the destinations are fine. And I have to say, people forget how big the Bahamas are. The chain is 700 islands. It's longer than California, and a couple of islands were affected. It's absolutely back in business.
But is it time to maybe invest in other regions, given that hurricanes are a reoccurring theme and therefore, a threat to your business?
Well, hurricanes are an issue, but we are investing in other areas. So our investment in China has been some of the largest that we've ever done. We just last week announced a new investment in a Perfect Day in Vanuatu off the coast of Australia. We're investing in Europe. So we are really becoming every day more and more of a global company. And that's proven to be a very successful formula for us. And it also diversifies our business. So when we do have something, it's a hiccup rather than a real blow.
And just to understand the advanced bookings, you're saying people are booking more and more in advance. What percentage of those people actually stay with that trip that they booked and take it?
The good news is that mostly when somebody books, if they put even $5 down, the cancellation rate is very, very small.
Really?
People, they make their decisions. They're cautious about making their decisions. And we say generally at any point in time, about half of the next 12 months is booked. More recently, it's been a little better than that because people have been booking a little further out. But once somebody is booked, they tend to have really thought about it, and they tend not to change that.
All right, Richard, great to see you. Thank you for coming by.
Nice to see you all again.
Richard Fain, Royal Caribbean, and our thanks to Decima Modi. And Check Please is next.
It's another Wednesday evening, yet another cold day. So ditch the British winter and chase the sun across the globe with British Airways from London Gatwick to see spectacular coral reefs and white sand beaches. Fly from London Gatwick to Mauritius with British Airways, with flights and 7 nights hotel from just £949 per person. Don't miss out. Book by November the 12th at ba.com/wintersun with British Airways. Incredible is within reach. Booking fees and conditions may apply. Limited availability. Selected flights in March.
London, switch to Vodafone, the UK's best mobile network, and V Unlimited, because the best phones deserve the best network and our new unlimited data plans. The future is exciting. Ready? Vodafone.
Max download speeds apply to unlimited data. Best network as voted by readers of trusted reviews. Terms at vodafone.co.uk/unlimited.
Ladies and gents, may I introduce a magical number? 25! Oh yes, 25 UK millionaires guaranteed in this Friday's Euro Millions.
Euro Millions, celebrating 25 years of the National Lottery. Your numbers make amazing happen. Rules and procedures apply. Players must be 16 or over.
Good. Here's a swing and a drive deep to right field. Looking up. Goodbye, baseball.
Between game-winning shots and walk-off homers, follow TuneIn on social media to discover the latest and greatest in live sports.
With the 24th pick in the 2019 NFL Draft.
From live reminders that the biggest MLB games are on the air, to recommendations of the best new sports talk shows and podcasts.
He's going to be fine. He's going to be good right away in 3 years.
Follow at TuneIn on Facebook, Twitter, and Instagram to get the most out of TuneIn.
The NBA is on TuneIn Premium.
He shoots it. It's good. It's a 1-point lead. They don't have a timeout.
Each week, TuneIn picks an NBA game you just can't miss.
You're off to Wiggins, straight away on the triple try. Bingo! He knocks it down at the buzzer.
The defending champions, Toronto Raptors, are in LA to take on the red-hot LA Lakers. Tip-off is at 9:30 p.m. Eastern this Sunday. Search NBA on TuneIn to follow your favorite NBA team today.
Well, Facebook has now put out a statement on California's ongoing investigation into the company, which we reported on earlier this hour. Julia Borston has the details. Hi, Julia.
Tyler, Facebook responding to California's Attorney General revealing its 18-month investigation into the company and its ask of the San Francisco Superior Court to require Facebook to comply with its subpoenas after the company failed to comply. But Facebook saying just now, quote, "We have cooperated extensively with the state of California's investigation. To date, we have provided thousands of pages of written responses and hundreds of thousands of documents. Right now, Facebook shares are trading down around 1.3%. Melissa, back over to you.
All right, Julia, thanks very much. I want to call your attention to shares of Tesla moving higher to session highs right now, up by more than 2%. S&P revising the rating on Tesla to a positive from a negative, and that is sending the shares higher. So something to watch into the close here.
All right. Always a good stock to watch, even on a day where the major averages are pretty calm. There you see it up about $7 a share.
Thanks for watching Power.
Closing bell starts right now.
Yes, it does. Welcome to the closing bell, everyone. I'm Wilfred Frost. I'm here at the Uber Post. That stock is sliding some 4% today as the post-IPO lockup expires. We've got comments from the CEO coming up. The broader markets, though, essentially flat. The Dow's down 6 points, 59 minutes left of trade.
And I'm Morgan Brennan in for Sarah Eisen. Let's look at what's driving the action today. China trade optimism getting dialed back today on reports of a possible delay in the signing of a phase 1 deal. Data taking a bearish turn as U.S. productivity dropped for the first time on a quarterly basis since 2015. And one bright spot in the market, HP, rising 8% on news that Xerox made an offer to buy the company. Joining us for the hour is Josh Brown from Mitholtz Wealth Management. Josh, great to see you today.
What's going on?
We got the S&P and the Dow basically hugging the flat line right now, taking a breather, you could say, from the record run we saw earlier this week. What do you make of it?
I think you nailed it. That's exactly what I see going on. The indices are stalling out, which, given the run-up we've had in the last 4 or 5 days, I don't think should be a huge surprise. Rates are higher, which is interesting. So you're seeing a lot of the big winners of the year, like the IYR, for example, which is real estate stocks, the XLU, anything rate sensitive, also taking a breather. The XLF is stalling out. The XLF, which is the financials index ETF, got above a 70 RSI for the first time, and I can't remember how long. That's an overbought index. When was the last time we were talking about the banks being overbought? So you have this confluence of things, but I think it's perfectly natural. Just keep in mind the big picture. Caterpillar, the whole industrials, XLI, ETF, all hit new 52-week highs yesterday. So Honeywell, new highs. These are things that do not happen in the context of a bear market or recession about to approach tomorrow. So I still believe we have to take the ebbs and flows of each day's news, not try to make any particular story into a bigger thing than it is, like today's China talk, stall out, or whatever they're calling it.
Financials and industrials. Morgan, he knows who he's talking to here.
I know. He led strongly right out of the gate.
Tempting us. So much more to discuss with Josh throughout the next hour. Let's focus in, though, on the big stories we're watching today. Kayla Tausche is covering those China trade headlines we just mentioned that sent the market lower earlier in the session. Leslie Picker has details on Uber's lockup expiration, and Phil LeBeau has new comments from Boeing CEO on the 737 MAX and his future at the company. Kayla, let's start with you.
Wilfred, the White House is still working toward a deadline of next weekend when the APEC summit would have been held, but a senior administration official acknowledges that might not be feasible as the two sides continue negotiating terms and eventually a venue before those December 15th tariffs. If the date gets pushed out, the signing summit would likely be in Europe, where President Trump will be in early December. He's expected to attend the NATO Leaders Summit in London, being held December 3rd and 4th. Trump, for months, according to officials, has suggested Switzerland as the ultimate neutral location, even as the U.S. was negotiating stateside locations with China. We'll see if we get any official venue announcement in the coming days or perhaps the coming weeks. Morgan?
Yeah, we'll be looking out for that, Kayla. Thank you. Shares of Uber, meantime, hitting an all-time low as insiders get a chance to sell shares for the first time since the IPO. Leslie Picker joins us now with more. Leslie.
Hey, Morgan, that's right. Another low today. 1.5 billion shares unleashed from their lockups. That represents about 88% of Uber's shares outstanding. So most people not surprised to see some red on the tape today, now down about 4%. While not everyone is selling their stock, the additional share supply is pressuring the stock, no doubt. But the declines today could have actually been even worse. CNBC.com points out that about a third of Uber's stock purchased privately is currently underwater, so those investors may choose to hold on a bit longer with the hope of recouping their losses. Guys.
Leslie, I've got a quick SoftBank question as it relates to Uber. Of course, lots of headlines today about their write-down for WeWork. Do they have to write down Uber day to day now because it's listed? So is that already factored into what they've done or not?
That's a good question. I don't think they have to do it day to day. Usually with these companies, when they own something that's already gone public as a strategic investment, they'll do it on a quarterly basis, or at least that's how they will disclose it to the market. But it's unclear whether SoftBank itself was a seller in today's lockup expiration. They did have an intention to sell in the IPO itself if they triggered the green shoe, the over-allotment agreement. That actually wasn't triggered, so they weren't able to sell at the time of the IPO because of the way the stock performed. So it's unclear whether they're actual sellers this time around. But I think it'll be interesting to see, you're right, next quarter, how they mark those shares moving forward.
Leslie, thank you very much. Either way,
they don't have to mark much, by the way.
They don't have to mark much. But once
they
it's listed,
could just call the Prince of Saudi Arabia and tell him how much he's down. That's what we're talking about. Like, I think anyone that's in the Vision Fund knows exactly where the price of Uber is.
It doesn't matter because, as Massa-san said this morning, the logic is simple. Time will resolve. We'll see a V-shaped recovery, referring to WeWork. So it's easy. No problem. It's going to bounce back.
Sure hope so.
I thought that was an extraordinary comment. Anyway, Uber clearly is only on the down part of the V as well itself at the moment, relative to when it listed, of course. Speaking of Uber, Recode's Kara Swisher was getting into a pretty heated exchange at the DealBook conference with Uber's CEO earlier.
I think your business is economically unsustainable the way it is right now. What is your AWS? What is the business that's going to take you? Because you don't have the time, you don't have the patience, and you are pulled into this idea of what's happened with WeWork, which I think was the firewall that just fell. What is the business that will bring you away from this, a similar fate?
Our rideshare business is our AWS.
The core one.
The core one. We had 22% margins this quarter. When we look at our top 5 markets, the EBITDA margins went from 17% to 62%. All right? In our rideshare business in the past 2 quarters, 80% of my revenue growth ran through into EBITDA. So when I look at the next 2 years, my growth is going to be probably, I'll do 8 billion in revenue growth. Hold on, 8 billion in revenue growth. And I need 3 billion to drop to the bottom line. It's about, call it a 38% flow through. And I just demonstrated an 80% flow through in 2 quarters.
So this is without
you actually do have to do the math, and the math works.
So this is without raising prices and without paying drivers more, because in a lot of people, you're going to still continue to get that pushback.
No, this is all based on there's going to be some price increasing. We're going to be going to the enterprise segment, for example, that is willing to pay higher prices. At the same time, we're going to make investments in pool and auto rickshaws, motorcycle, etc. This is business as usual for us.
Josh, you were at DealBook earlier today. What do you think of that exchange?
I think it was notable. First of all, I'm going to give I'm going to give Kara a pass on the sunglasses. There really was a glare coming in from Columbus Circle, and she's a new parent, so maybe not
and it's
sleeping.
Her style. She wears it
and it's her shtick. She's so great. So I think what was really interesting about that, the entire morning was CEOs defending themselves for Johnson & Johnson, Boeing, and then Dara comes up, and that was a really important question because what's being questioned now across the whole stock market, in Silicon Valley, on Wall Street, everywhere, are these TAM businesses. It's like, don't tell me what your revenue growth is. How much of it can you drop to the bottom line? And he also had to defend whether or not Uber Eats was ever going to be a good business.
That's what got my attention. Same methodology, I think he said, as the rideshare business?
Yes, and so here's what was interesting. He said, if I were up here 2 years ago, you guys would all be really excited about Uber Eats. And I know that because I was. And so now you're more excited about rideshare than Eats. And I can't control that. That'll go back and forth, what the market wants, but we think we're going to be profitable on everything. At least that's his story. He's sticking to it. The other notable thing, they asked him if his business model gets wrecked, if some of these legislative changes come about the way they're paying drivers and the way drivers are being compensated. And he points out they have different models in France. They're doing something different. They may have to pay health care here. He thinks they'll be fine no matter what happens. It'll just be an adjustment. I don't know if the audience bought it.
Just quickly on the technicals and the lockup, if in a week's time it started to pick up again, having got through this week of the lockup.
The share price pick up?
The share price picks up. Is that significant to you or not really?
No. I mean, because you have to ask yourself, who is the buyer? Anyone that wanted Uber really badly probably got it. They may still be there. They may not. The value people are not coming into this. Normally, you have a stock fall 30%. There are like value funds that will say, all right, this is cheap enough for us now. This is a $50 billion market cap. They're going to lose $8 billion this year. Who is the buyer? Mm-hmm. And it's a very long time before you find a buyer that can make a value argument. The momentum funds aren't buying. Growth funds, arguably, they're already in it if they want it. So I try to figure out who's coming in to buy. I can't think of anyone.
Yeah, you can make this argument about a number of the companies that have gone public this year.
No doubt.
Embattled Boeing CEO Dennis Muhlenberg also speaking at today's DealBook conference, and Phil LeBeau has the highlights from that. Phil.
Morgan, Dennis Muhlenberg's appearance at DealBook comes one day after the chairman of Boeing, Dave Calhoun, told us yesterday, we have Dennis Muhlenberg's back as CEO. But Andrew Ross Sorkin put Mr. Muhlenberg on the spot early on and asked him whether or not he has considered resigning. Here's what he had to say.
I think it's fair to say I've thought about it. But to be frank, that's not what's in my character. I don't see running away from a challenge, resigning as the right solution. The way I grew up, what I believe in today and the values I try to share with my team is when we have challenges, we face into them. You know, these two accidents, they happened on my watch at Boeing. And I feel obligated, I feel responsible to stay on it, to work with the team to fix it.
Dennis Muhlenberg also said that he expects to lose millions, tens of millions, because he is foregoing a bonus as well as stock awards for this year, likely for next year as well. He also plans to make a donation to the victims' families' funds. As you take a look at shares of Boeing, under a little bit of pressure as people continue to question whether or not this plane will be certified by the end of the year. Guys, back to you.
Phil, it's amazing because Boeing shares are up 2.5% over the past week. We had Muhlenberg doing testimony on the Hill for 2 straight days. And now, obviously, Calhoun coming and talking to CNBC yesterday, Muhlenberg today. It seems like a lot of the read-through that I've gotten from investors is that maybe we're starting to near the end of the worst of this crisis. The fact that they're coming out and speaking as publicly as they are this week,
right.
Is that an interpretation to be had here?
Well, they certainly want to get a hold of the narrative because they lost the narrative last week on Capitol Hill. Look, I think at the end of the day, what really matters more than anything else to everybody is, can they stick with this timeline? Can they get it certified by the FAA by the end of the fourth quarter? If they don't change that timeline, then I think that you see this stock at least stabilizing where it is, perhaps moving a little bit higher. But we've got, what, 6-7 weeks, guys? 7 or 8 weeks until the end of the year. A lot of things have to happen between now and that certification.
Phil, I have to say, I hate that they even mention that they're giving up a bonus, as if a bonus was guaranteed in the first place. A bonus should be for good performance. There is no doubt that has not been the case.
I understand what you're saying.
It would be something, it'd be something to say if you're giving up part of your base pay, but to mention the bonus as if that's a bold thing to do is frankly embarrassing. But either way, Phil, if we consider the peak of the pressure, those hearings last week, and then the comments quite clearly from the chairman to you yesterday. Is this now a point where Dennis Muilenburg has come through the peak of the threat to his position and starting to at least improve in terms of sentiment towards that and holding on to his position now?
Well, I think you saw the stock move higher yesterday on Dave Calhoun's comments, because they were strong comments that he made to us about how the board feels about Dennis Muilenburg remaining as CEO. In terms of whether or not the peak of the pressure on Dennis Muilenburg has passed, I still think it comes back to the plane. Look, if these guys come out in 2 weeks and they say, we're going to have to delay this again until the first quarter, or something else comes up, well, then you could see the pressure mount once again, and people say, here we go again. There's more bad news regarding the MAX. So it really does come down to the certification process between now and what they're targeting by the end of the year.
Phil, as always, thanks so much. Great interview yesterday as well. Still ahead, presidential hopeful Elizabeth Warren responding to comments from our exclusive interview with Jamie Dimon yesterday here on Closing Bell. We'll tell you what she has said and discuss all the implications ahead.
And after the break, shares of the New York Times Company are up more than 30% this year, but pulling back sharply today on the heels of earnings, down 5% right now. We'll speak with the company's CEO in a first on CNBC interview. That's next.
It's another Wednesday evening, yet another cold day. So ditch the British winter and chase the sun across the globe with British Airways from London Gatwick, and relax with 365 beautiful beaches.
So what would you like to have?
Fly from London Gatwick to Antigua with British Airways from £223 each way based on a return fare. Don't miss out. Book by November the 12th at ba.com/wintersun with British Airways. Incredible is within reach. Booking fees and conditions may apply. Limited availability. Selected flights in March.
Oh, these walls are definitely on my naughty list.
Want your walls to be merry and bright? Get to B&Q. 2.5 litre Good Home Durable Matte Emulsion is just £16. And being wiped clean, there's no need to worry about mucky little mitts this Christmas. So why not add some festive cheer and impress your guests too? Bring the magic home with B&Q.
Hey NFL fans, can't watch the game? Can't be there? No biggie. With your TuneIn Premium membership, you have unlimited access to every team and every game in the league. Listen live as it happens or on demand. Anytime, anywhere. All season long. Search NFL today.
In the dictionary, a podcast is this: a digital audio file made available on the internet, typically as a series, of which new installments can be received by subscribers automatically. But on TuneIn, a podcast is this.
I'm Adam Grant, and this is Work Life, my podcast with Ted. I study how to make work not suck.
And it's defined like this.
Blackout is a suspense-filled thriller from Endeavor Audio and Q-Code.
From news, sports, to pop culture, comedy, and beyond. Define your own podcast possibilities on TuneIn. You're listening to TuneIn, where you can hear all the audio you love in one place. Live NFL games, the hottest music, breaking news, and podcasts. Push play and go about your day, only on TuneIn.
Good. Here's a swing and a drive deep to right field. Looking up. Goodbye, baseball.
Between game-winning shots and walk-off homers, follow TuneIn on social media to discover the latest and greatest in live sports.
With the 24th pick in the 2019 NFL Draft.
From live reminders that the biggest MLB games are on the air, to recommendations of the best new sports talk shows and podcasts.
He's going to be fine. He's going to be good right away in 3 years.
Follow at TuneIn on Facebook, Twitter, and Instagram to get the most out of TuneIn.
Hey, can't watch the big NBA game because your life's just too busy? I've got some news for you. TuneIn Premium is the answer to all your problems. Hear every home and away game live or on demand everywhere you go. Just search NBA to listen.
Welcome back to Closing Bell. The New York Times Company beating earnings estimates. The stock is down more than 5% today as the company expects a challenging fourth quarter ahead. New York Times CEO joins us now in a first on CNBC interview. Mark Thompson, thanks for being with us. You've had a busy day between earnings and the Deal Book Conference, which we've been following pretty closely. Thanks for being here.
Yeah, no, I mean, we're very proud of this conference. Actually, plenty of news being broken here today, so the conference is going well. And I want to say we're also very pleased with the company's results today, which we did an earnings call this morning.
Your own Ed Lee, Mark, good afternoon to you, by the way. Thanks for joining us. Your own Ed Lee wrote of the results. Readers continue to shower New York Times with money. Advertisers, not so much. Is that a fair summary?
Well, look, we guided to a potentially challenging fourth quarter for digital advertising. There are particular reasons for that. We did it fantastically well a year ago. Digital advertising went up 30% a year ago. That's a pretty tough comp. 1 or 2 very, very big deals are not going to repeat in the fourth quarter. We've done the deals. We've done very similar big deals. They won't appear till 2020. So there are reasons for that. But what I want to say is on the subscription side, which is now getting on for 70% of the business, we're very excited. We're seeing real acceleration in subscriptions, as Ed noted in the Times this morning. And we think there's real kind of further momentum to get out of that model. So we've built already the biggest news subscription business there's ever been, I think. And we still think we've got real scope to scale it even further.
In terms of the deal with Facebook, that company launching its news tab, New York Times is going to be a part of that. Do you think we're going to look back on this moment in time and see it as essentially a turning point in terms of the revenue model for digital advertising and for publishing?
Yeah, I mean, a few years ago, there was a really important moment when Rupert Murdoch and others managed to win the case for cable companies paying broadcast TV channels fees for their appearance on cable networks because of the value the broadcast networks in those days were bringing to cable. And I think the major platforms, digital platforms, are beginning to recognize that the presence of really high-quality news brands like the New York Times, the Wall Street Journal, and so on, makes a real difference to their users. And whether that is expressed in license fees, like this license fee which Facebook's going to pay us for the next few years, whether it's expressed in other ways, I think that both the power balance but also the kind of value balance between the Silicon Valley majors and publishers like the Times is changing. So yeah, I do think it's strategically quite an important day.
Do you have a feeling, Mark, of what you expect over the long term revenue per eyeball, per article to be via Facebook versus directly via your own digital subscription app?
Sure, Wilf. Now, I want to say our thesis is the overwhelming majority of revenue for the Times, we believe in the future, is going to come from users who are in quite a deep relationship with the New York Times and are coming to the Times on our own digital assets. But we need Times journalism to be really influential. We want to spread it around the world. We want people to be able to sample it so they become the subscribers of the future. And of course, it's great if we can, as we're making the journalism available to sample, if our partners can also be helping to pay the cost of making that journalism, so much the better. So to me, it's both and. I mean, the big thesis is subscription directly, but also this other revenue stream can potentially really help us.
One final question, Mark, I had on the subscribers. 4 million digital subs, 4.9 million total readers, including print. I know where the long-term targets are for sort of 10 years away. What about in the next 12 months? Do you expect it to pick up pace and then drop off after the election? Is there a strong correlation expected there? And which Democratic nominee do you think plays best for your subscription?
We cover the news. We don't try and kind of, as it were, make the news or change the weather. Look, a lively news cycle helps all news organizations, even CNBC. But our model's not reliant on that. We're doing so much more than just news. I mean, I take our 1619 slavery project, which has been such a big thing this year. We're producing a great body of valuable news, comment, features, lifestyle comment, and we're getting better at packaging that and marketing it as digital subscriptions to the world. And I hope that we can get to a run rate of 1 million new subscribers a year, and having got to it, stick to it, so that the model doesn't just go on growing, but keeps on accelerating as it grows.
All right, Mark Thompson, thanks for joining us today. Up next, a bullish sign for housing. One firm just upgraded lows and bumped its price target on the stock. We're going to tell you why next.
It's another Wednesday evening. Yet another cold day. So ditch the British winter and chase the sun across the globe with British Airways from London Gatwick and witness luscious scenery and calming waves. Fly from London Gatwick to St. Lucia with British Airways, with flights and 7 nights hotel from just £739 per person. Don't miss out. Book by November the 12th at ba.com/wintersun. With British Airways, incredible is within reach. Booking fees and conditions may apply. Limited availability. Selected flights in March.
Get social with TuneIn. Follow us on Facebook, Twitter, and Instagram for the latest and greatest audio on the app. Explore exclusive content. Learn about hot new podcasts and get alerted when the big game, well, it's about to begin. Add TuneIn to your feed and be in the know when it matters most.
Stuck in traffic during the big game? With TuneIn Premium, you can listen to your favorite NFL team on the go. No TV required. Even during rush hour, you won't miss a single touchdown. Listen to the NFL on TuneIn Premium today.
College football is live on TuneIn. Listen for free to games from more than 140 schools all season long.
To the 10, all the way to the checkerboard.
This Saturday at 3:30 p.m. Eastern, number 1 LSU is taking on number 2 Alabama with a battle between LSU's quarterback Joe Burrow and Alabama's QB Tua Tagovailoa. Both are potential number 1 picks in the NFL Draft. Listen to every call and every game of your school all season long for free on TuneIn. Just search college to listen today.
This is not a commercial. This is a reminder. With TuneIn Premium, you could be listening to more music commercial-free. Get over 45 commercial-free music stations. Visit TuneIn.com/premium to upgrade.
Far wing, elevates, triple bucket.
The roar of the crowd. The shot clock ticks down. Will the ball go in? The suspense is pure torture, but you wouldn't miss this for the world. And the replays just don't cut it.
The sideline, the man fleet for 3.
TuneIn Premium brings you every minute of the NBA season streaming live, so you can be there when it matters most. Hear it now, hear it live on TuneIn.
Pump fake in the lane, turnaround jumper from 8 feet is good on the
Search
right spot.
NBA today to start listening.
To closing bell, time now to get to the word on the street. Raymond James giving a bullish outlook on athletic retail. The firm initiating Lululemon at a strong buy and Nike at outperform, while resuming coverage on Under Armour at outperform. The firm believes the group is well positioned for continued growth for at least the next decade, saying long-term trends towards comfort and wellness continue to redefine how consumers dress.
Deutsche Bank upgrading BlackRock, Invesco, and State Street to buy. The firm citing expectations for more favorable economic conditions and more risk-on investor behavior through the 2020 elections. And Credit Suisse upgrading Lowe's to outperform. The firm saying the stock offers a compelling risk-reward. It also says lower interest rates could lead to increased demand in the home improvement space. That stock up 0.5%. Josh, we want to ask about the asset managers there. Do you buy into that thesis just because of bullish markets?
I really don't, but I like BlackRock. I think they'll be right on that. If you look at those 3 names, the other 2 are losing market share, and BlackRock is taking it. So BlackRock technically is breaking a double top at about 480. That's been a level that's been resistance, ripped right through. There may be a retest, but I would buy it right here. Still nowhere near the mid-5s, which were the highs from the summer of 2018. A lot of financials have their old highs at those levels, but this is a 52-week high. And again, this is a company that has repeatedly raked more of the chips toward themselves. Asset management right now is a cutthroat business, but BlackRock, iShares, they're doing all of the right things, and I think the stock will continue to win.
BlackRock up 1.5% today. We've got 34 minutes left of trade at the moment. The Dow's just positive, up 4 points, but essentially markets are flat. The Nasdaq down 0.3%. Coming up, we've got your last chance trade.
And after the break, a new survey from Goldman Sachs showed a major shift in sentiment this month. We'll dive into those results next. Here's a check on bonds, meantime, though. U.S. yields pulling back today for the first time in nearly a week as concerns about the China trade deal creep up. We'll be right back.
The Bond Report.
It's another Wednesday evening. Yet another cold day. So ditch the British winter and chase the sun across the globe with British Airways from London Gatwick. Experience Mexican culture and relax by the Caribbean Sea. Fly from London Gatwick to Cancun with British Airways from £275 each way based on a return fare. Don't miss out. Book by November the 12th at ba.com/wintersun with British Airways. Incredible is within reach. Booking fees and conditions may apply. Limited availability. Selected flights in March.
Do you really expect my mother to sit on that?
Bathroom in need of a festive fix-up? Get to B&Q. We've all you need to get ready for the in-law invasion. From simple solutions like shelving and storage to essentials like the Diane soft close toilet seat for just £25. Bring the magic home with B&Q.
Hi, this is Brian Weber, host of NFL First and Goal every Sunday, kicking off at 1 Eastern only on TuneIn Premium. Be sure to listen this Sunday for the ultimate football fan experience, featuring 7 hours of commercial-free coverage of every scoring play around the NFL.
Good. Here's a swing and a drive deep to right field. Looking up. Goodbye, baseball.
Between game-winning shots and walk-off homers, follow TuneIn on social media to discover the latest and greatest in live sports.
With the 24th pick in the 2019 NFL Draft.
From live reminders that the biggest MLB games are on the air to recommendations of the best new sports talk shows and podcasts.
He's going to be fine. He's going to be good right away in 3 years.
Follow at TuneIn on Facebook, Twitter, and Instagram to get the most out of TuneIn.
Ah, finally another commercial, said no one ever. Visit tunein.com/premium to upgrade now and get over 45 commercial-free music stations.
In the stock market and in life, everything can change from 1 minute to the next. Be the first to hear the latest money news and market trends with CNBC on TuneIn. Wherever your day takes you, listen to CNBC's full slate of programming, including shows like Fast Money, Squawk Box, and Mad Money with Jim Cramer. And when the next big business story breaks, CNBC lets you know with live updates and commentary. At the office, at home, or on the go. Search CNBC on TuneIn to listen.
Want to know a quick, easy way to see if your favorite podcasts have a new episode available? Just go to the home screen on your TuneIn app and see the latest editions under the Your New Episode section. Happy listening.
Welcome back. Just over 30 minutes left to trade, and the Dow is essentially flat. Here are the key things driving the market action. Concerns mounting about timing for the Phase 1 trade deal with China. Data taking a bearish turn as U.S. productivity dropped for the first time since 2015. And the energy sector pulling back as crude prices fall after a spike in U.S. inventories. It's time for a CNBC News update. Sue Herrera's got it for us. Hi, Sue.
I do indeed. Hi, Will. Here's what's happening at this hour, everybody. The Senate Committee on Aging hearing sobering testimony on how veterans and the elderly are being scammed out of millions of dollars and what more can be done to protect potential victims.
The question of whether or not they get their money back, it's a sad conversation to have, but in each and every one that I've had with whether it's my victim or victims in this same case throughout the state, they knew they weren't going to get the money back.
First Lady Melania Trump visiting a Boston hospital that uses cuddling to help infants born dependent on drugs or alcohol. She met with caregivers and administrators at Boston Medical Center, and she told them she is, quote, very focused on their pioneering work. It is part of her Be Best initiative.
It is so important to acknowledge and show gratitude for what you are doing to help mothers who struggle with addiction and babies born with neonatal absence syndrome.
You are up to date. That's the news update this hour. Morgan, I'll send it back downtown to you.
Sue Herrera, thank you. It's time now for the buzz on the street. We brought you word on the street, now it's buzz on the street. We've got new details on a story we told you about yesterday involving Robinhood users who discovered a glitch that let them trade with unlimited borrowed money. Let's bring in CNBC's Kate Rooney for an update on the story. Kate.
Hey, Morgan, absolutely the buzz. So traders had the potential to either make or lose a ton of money this week. They took advantage of a glitch over at Robinhood. The hack was shared on Reddit and let people put down huge positions without actually having money in their account to fund those. So there's a few implications here on both sides. First, let's hit Robinhood. So brokerage firms are supposed to have certain protections to avoid this. But because the startup didn't in this case, legal experts I spoke to say the SEC and FINRA could as they say, throw the book at Robinhood for multiple violations. I reached out to both the SEC and FINRA, and they declined to comment. But now to the customer. So if they borrowed too much and ended up losing big on a margin trade, the trader here is the one responsible for paying the brokerage back. That means Robinhood could come knocking and eventually ask for that money. Legal experts I spoke to are not expecting Robinhood to pay customers for any ill-gotten gains they got if they cheated the system here. I'm told it doesn't quite go to the level of securities fraud, but if the customer is not able to pay Robinhood back, it could result in a lawsuit at the very least.
Kate, great story and great work on this over the last couple of days. I think this is absolutely extraordinary. A sort of social media style cheat code that you could apply to a computer game was enough to allow people to borrow this sort of money. And if this was a big bank that allowed this sort of glitch, the uproar would be enormous. As Kate completely points out there, it's quite possible that a consumer here could have lost an absolute fortune here. And I don't quite understand.
No, it's not true. You're wrong. I'm sorry.
In what way?
So Robinhood is going to pay fines. They're going to get in trouble.
Do you disagree that if JP Morgan wrongly allowed someone to borrow $1 million to invest in a stock, that the uproar would be much larger?
Well, no, I think you're right about that part of it. I don't mean to say you're wrong, but I think we need to distinguish between a securities fraud where somebody willfully and deliberately, and then something like this where they just built a system that shouldn't have allowed for this. Just for people watching at home, this isn't like Robinhood getting people to take more risk than they want to. Here's what these kids are doing, and they're psychopaths. They figured out that they could sell puts, take in option premium, use that to buy more shares of a stock, and then sell puts against those shares, use that to take in more option premium, and on and on and on in like a Jacob's Ladder kind of thing, to the point where with only a couple of $1,000s at risk, they could take like $1 million position. This is not like something where somebody accidentally walks and falls into a hole. You have to be deliberately trying to do this. So that's the first thing. So it's not like every Robinhood customer is at risk. So I just think it's important. Like, there's no way they wanted this, because if one of these kids blows up an account, Robinhood's out the money. These kids aren't coming in to make a margin call for $1 million. So I just think, like, yeah, they'll pay a fine, but let's not act like they're like trying to hurt anyone. I think it's very clear they have the most to lose. Robinhood is the most to lose, and Snoop Dogg.
I mean, of course, I think Robinhood is no way complicit in anything here, but nonetheless, there are important financial regulations that apply to the big guys. Of course. And the uproar would have been huge if it was one of them.
That you're right about. I think that speaks to the fact that you're talking about a startup, right? You're talking about a tech startup that is involved in fintech.
The follow-on point I was going to make on this is fintech has not disrupted the banking system as much as tech has in, say, the retail space. And I think this is a sort of indication of why. This is an example where consumers are making trades, so they're the ones that are risking stuff. But you now say Robinhood in the future, which is not happening at the moment, wanted to be a broader bank online. I think consumers look at this and say, do I really want to give my savings to a company that has this sort of glitch and could have these sort of errors?
Not only are you right
and
about
that is why JP Morgan and co haven't seen deposits distance.
Not only are you right about that, on the flip side, if you're one of these people that are saying, let's disrupt the bank, you might find it's way less glamorous and romantic than it's. These are not fun businesses to be in because of all of the regulations and consumer protections. And like, this is not the same as, hey, let's go do grocery stores.
Right.
Like, this is way, way more involved. So I think you're right about that.
So when you start at the top, say you totally disagree with me, we actually kind of agree on quite a lot of this.
I just don't like that. Of course, Robinhood should be held accountable for this, but it's not like people got hurt. These kids are out of their minds. They're looking for ways to take reckless risks, and arguably, they're like doing it to impress their friends on a chat site. Like, it's totally immoral behavior on behalf of the users. It's not really Robinhood being immoral, but they got to tighten up. It's finance. So
thanks to Kate Rooney as well, and check out her full story online, CNBC.com. Moving on, markets hovering in record close territory, and the majority of institutional investors think the positive momentum will continue this month, reversing bearish sentiment in October. That's according to the Goldman Sachs monthly marquee poll. Joining us for more on that is Goldman's global head of hedge fund client coverage, Tony Pasquarello. Tony, good to see you. Thanks for joining us.
Wilf, good to be back. Thank you.
So the exclusive results of your poll just out, and investors broadly improving their kind of risk sentiment at the moment.
That's great. We think this is pretty interesting. So for the better part of the past 6 months, our institutional clients identified as very clearly on the cautious end of things. That changed in the most recent sample. So this survey was conducted Monday and Tuesday, 1,300 institutional respondents, and the ratio of bulls to bears came out at 2-to-1. In the prior survey, we had recorded near record levels of investor negativity. So a big month-on-month swing, perhaps not a surprise with the market all-time highs that investor sentiment was lifted.
I was going to say, though, why do you think the shift? I mean, is it the Fed cutting rates? Is it something else at play here?
Prices went up.
So I would say price matters, and so when you're at all-time highs, the total rate of return on S&P 500 this year approaching 25%, that certainly colors investor sentiment. But I think you hit two important points, which is during the month of October, which was a plus 2% month for S&P, a plus 4% month for NASDAQ. Two things: the direction of travel on Brexit and the direction of travel on U.S.-China trade turned more positive.
Has positioning altered a lot?
So this is very important. So we're always looking with survey data for a few things: change in narrative. We're looking for extremes, and we're also looking for where there's a wedge between sentiment and positioning. So again, sentiment very clearly swung to the bullish side. When asked about, do you expect to change your risk in the month of November, only 12% of our clients said they expect to add risk. So the moral of that story is perhaps clients are more bullish in sentiment than they're genuinely long of position.
Stepping away from the survey data, Tony, just to ask about trading in the last couple of weeks, as the last month or so. I mean, has that volume's been very low?
Volumes I would characterize as steady. So realized volatility has come down quite a lot. So if you were to measure the realized moves, actual moves in stocks, bonds, currencies, and commodities, we're at the lows of the past 10 years. So the market hasn't forced you to transfer nor add a lot of risk. But again, the context has been one of risk on. And so client risk appetite's been picking up slowly but surely.
So what would you expect to see through the end of the year?
Market-wise,
yeah.
I think personally the big dynamics in the game remain pretty favorable. I say that because, number one, U.S. growth continues to prove more durable than expected. 2% for the next several years will be our forecast. The Fed has pivoted in a very meaningful way. We are now, as we sit here today, they've cut rates obviously 75 basis points. The real Fed funds rate is neutral, and despite an all-time high in stocks and a 50-year low in unemployment, they retain an asymmetric easing towards the dovish side. And then lastly, again, the direction of travel on Brexit and China, the trade tensions, much more positive. So I think there's still gas in the tank, and the path of least resistance for the next couple of months is higher.
Okay. Tony, thanks for joining us.
Thank you.
Up next, we've got your last chance trade.
And after the bell, we'll get earnings from Roku, Qualcomm, Square, Expedia, and many more. Shares of Qualcomm up about 50% year to date. We'll be back in a couple minutes.
CNBC Sector Sword is sponsored by Sector Spider ETFs. Sector Spider ETFs. Visit us on the web at sectorspiders.com.
Can I find an investment?
It's another Wednesday evening. Yet another cold day. So ditch the British winter and chase the sun across the globe with British Airways from London Gatwick and witness luscious scenery and calming waves. Fly from London Gatwick to St. Lucia with British Airways, with flights and 7 nights hotel from just £739 per person. Don't miss out. Book by November the 12th at ba.com/wintersun. With British Airways, incredible is within reach. Booking fees and conditions may apply. Limited availability. Selected flights in March.
What if your email let you see a project's entire history and not just the messages sent to you? What if everyone else on your team could see it as well? Then it wouldn't be email at all. Move communication from inboxes to channels in Slack. Instead of seeing a partial set of messages about a project, everyone in Slack sees exactly the same thing and moves work forward faster. Slack. Choose a better way to work. Get started at slack.com.
Oh, these walls are definitely on my naughty list.
Want your walls to be merry and bright? Get to B&Q. 2.5 litre Good Home Durable Matte Emulsion is just £16. And being wiped clean, there's no need to worry about mucky little mitts this Christmas. So why not add some festive cheer and impress your guests too? Bring the magic home with B&Q.
The Better Network is now on TuneIn. This is Brent Musburger.
Search the Better Network. That's the BETR Network. And then let us get you better prepared to better enjoy the day in sports. The NFL, college football, basketball, hockey, baseball. Sharpen your edge. The Better Network is now on TuneIn. Be better informed. Be better prepared. Search the Better Network. That's BETR.
Ah, finally another commercial, said no one ever. Visit tunein.com/premium to upgrade now and get over 45 commercial-free music stations.
College football is live on TuneIn. Listen for free to games from more than 140 schools all season long.
To the 10, all the way to the checkerboard.
This Saturday at 3:30 p.m. Eastern, number 1 LSU is taking on number 2 Alabama with a battle between LSU's quarterback Joe Burrow and Alabama's QB Tua Tagovailoa. Both are potential number 1 picks in the NFL draft. Listen to every call and every game of your school all season long for free on TuneIn. Just search college to listen today.
We got 17 minutes left to go. The Dow is essentially flat. Josh, what is your last chance trade?
I want to put the spotlight on Berkshire Hathaway B shares. We don't really talk about the stock that often.
Yeah.
It's approaching a major breakout point. I think if it gets above 225, that has been resistance. Stock has been consolidating for all of 2018 and all of 2019, and here we are back at the upper end of that range. Notably, company now has, I think, $130 billion in cash on its balance sheet. And a lot of people would look at that and say, even if there's a market event, even if there's a correction into year, whatever the case may be, Berkshire is now in the best cash position it's ever been in. This is precisely the type of financial company that could actually take advantage of a storm in the market. So it's an interesting stock from both perspectives. So BRKB, keep an eye on that as it breaks through 225. There are no sellers. Nobody is down in the stock. I think it's pure blue sky from there.
So do you see this as more of a defensive play longer term then?
I mean, it's not really defensive in the sense of like a bond being defensive.
Yeah.
Like it will trade
the cash
lower.
pile, the fact that they have so many different types of businesses.
Correct. Like this is the type of stock. It's got some pro-cyclical aspects to it. They own a railroad, but then it's got this huge cash hoard. It's got AAA credit. It's got the ability to take advantage of a market storm. And I think if you think about it from both perspectives, it makes a lot of sense to be an investor.
You talked about the banks starting to sort of peter out earlier. Can Berkshire still break out if the banks pull back? Because big position in the banks now.
It's in the financial sector. It trades more like an insurer.
So I don't mean because of correlation. I mean because they hold such big positions in JP Morgan, US Bank Corp, Wells Fargo, Bank of America.
Huge investments across the financial sector. I think the way to think about, I'm talking about a tactical trade. So the way I would say it is, you got a 76 RSI on Berkshire Hathaway, which most people would say is short-term overbought. I would disagree. I think it could be in the 70s on a breakout. I think it should be slightly overbought. The last time Berkshire traded with an RSI north of 70, you have to go back to last September, so more than a year. So I would stay with this one as it breaks through. I appreciate that argument that it's susceptible to the banks, but it's a conglomerate, and there are a lot of other moving parts to the story.
Berkshire's up a third of 1% today. We've got 14 minutes or so left of trade, and at the moment we're down 15 points on the Dow. S&P fractionally lower. Nasdaq down a little bit more, 0.4%. Up next, uninterrupted coverage of the final minutes of trade. And tonight, be sure to catch Alex Rodriguez, in the series premiere of Back in the Game, 10 p.m. Eastern, right here on CNBC. Closing bell, back after this.
It's another Wednesday evening, yet another cold day. So ditch the British winter and chase the sun across the globe with British Airways from London Gatwick and enjoy stunning white sand and crystal blue sea. Fly from London Gatwick to the Maldives with British Airways from £300 each way based on a return fare. Don't miss out. Book by November the 12th at ba.com/wintersun with British Airways. Incredible is within reach. Booking fees and conditions may apply. Limited availability. Selected flights in March.
don't forget to book Butlins, Joe.
Already done, Stace. This year and next.
Gosh, we might as well just move in there.
For an exciting family break to Butlins, book online now. There's so much included in the price.
Are you curious what others are listening to on TuneIn? Head to the trending section under Browse to see the most popular stations and podcasts among TuneIn listeners right now. Check it out. You might just discover something new for yourself.
Hi, this is Brian Weber, host of NFL First and Goal every Sunday, kicking off at 1 Eastern only on TuneIn Premium. Be sure to listen this Sunday for the ultimate football fan experience, featuring 7 hours of commercial-free coverage of every scoring play around the NFL.
Far wing, elevates, triple bucket.
The roar of the crowd. The shot clock ticks down. Will the ball go in? The suspense is pure torture, but you wouldn't miss this for the world. And the replays just don't cut it.
The sideline, the man fleet for three.
TuneIn Premium brings you every minute of the NBA season streaming live, so you can be there when it matters most. Hear it now, hear it live on TuneIn.
Pump fake in the lane, turnaround jumper from 8 feet is good on the
Search
right.
NBA today to start listening.
This is not a commercial. This is a reminder. With TuneIn Premium, you could be listening to more music commercial-free. Get over 45 commercial-free music stations. Visit TuneIn.com/premium to upgrade.
College football is live on TuneIn. Listen for free to games from more than 140 schools all season long.
To the 10, all the way to the checkerboard.
This Saturday at 3:30 p.m. Eastern, number 1 LSU is taking on number 2 Alabama with a battle between LSU's quarterback Joe Burrow and Alabama's QB Tua Tagovailoa. Both are potential number 1 picks in the NFL draft. Listen to every call and every game of your school all season long for free on TuneIn. Just search college to listen today.
Want to know what's happening in right now? The latest headlines are just a tap away with Fox News Talk on TuneIn. When news breaks, get up-to-the-minute coverage on developing stories from around the world. Plus, hear all the Fox shows you watch on your TV. Listen to Fox News Talk around the clock on TuneIn.
In the dictionary, a podcast is this: a digital audio file made available on the internet, typically as a series, of which new installments can be received by subscribers automatically. But on TuneIn, a podcast is this.
I'm Adam Grant, and this is Work Life, my podcast with Ted. We study how to make work not suck.
And it's defined like this.
Blackout is a suspense-filled thriller from Endeavor Audio and Q-Code.
From news, sports, to pop culture, comedy, and beyond. Define your own podcast possibilities on TuneIn.
Less than 11 minutes left in the trading day. All the major averages are down ever so slightly right now. We are in a closing bell market zone, a commercial-free coverage of all the action going into the close.
And CNBC senior markets commentator Mike Santoli is here to break down all these crucial moments of the trading day. He's joining us from the Schwab Impact Conference in San Diego. Good afternoon to you, Mike. Good to see you there. We've also got Josh Brown from Ritholtz Wealth Management here as well. Let's kick things off with SoftBank reporting its first quarterly loss in 14 years. Deirdre Bosa has more for us. Hi, Dee.
Hey, Wilf, blame it on the Vision Fund. That, of course, is SoftBank's $100 billion unicorn pot that had to write down some of its biggest investments, like WeWork, a $4.6 billion loss for the group that Masa-san said he turned a blind eye to, and Uber, which continues to flounder as a public company. Perhaps most interesting and worrying was his comment that there may be other potential WeWork-like concerns in the Vision Fund universe. He pointed to Wag, the dog walking app, but there's questions swirling around other portfolio companies as well. Guys, if the others run out of money, too bad. Masa-san promised this morning no more rescues. Back to you.
But Dee, it's okay, right? Because WeWork's just on the down part of what is guaranteed to be a V-shaped path.
That's right. He says that he's got his best people on it, like Marcelo Claure, which have turned around Sprint. He says, of course, that's up for debate. One analyst called it an unmitigated disaster. But Masa-san says that they will turn around WeWork by cutting costs and stop growing, basically.
Deirdre, thanks very much for that. On the topic of WeWork, there was lots of comments with Jamie Dimon on this yesterday. In terms of the headline question about valuations, he was pointing out, but it was never actually $47 billion. I do think that's kind of fair. Maybe it was touted to one day possibly get there. I think the fall from grace is severe and sharp no matter which way you look at it. But whether or not it really reached 47, we don't actually know. That could have been...
Don't get it twisted. If they could have brought it public at 47, they would have.
Oh, of course they would have done.
And it was coming. And the only reason it didn't happen is Uber. Had Uber traded to 70 rather than 30 post IPO, Adam Neumann right now is being celebrated all over the place, and WeWork has had. Believe me when I tell you, that was what changed the sentiment shift from Lyft and Uber not being hot when they hit the public markets is why people actually read the S1 that WeWork filed. Prior to that, we were taking everything public at 30 times revenue indiscriminately.
WeWork was already not going to hit 47.
I don't know.
Maybe it would have got away.
That's true.
20 or 30, maybe, which would still be way better than 7 or 8.
We don't have that counterfactual, but I'm telling you, if they could have gotten a $40-some-odd billion valuation for it, they would have.
Of course they would have done.
Yeah.
That's their job. They're underwriters. They work for, right? They work for the issuer.
All right, let's talk about an old tech name now. HP is soaring today as sources tell CNBC's David Faber that Xerox has made a cash and stock offer for the company. Xerox, which makes printers and copiers, has a market cap of $8.05 billion. That's less than a third of HP's. Faber reporting that combining the companies could save more than $2 billion in expenses. Mike Santoli, what do you make of this? There wasn't a lot of talk or emphasis, at least from an investor or an analyst standpoint today on the heels of these reports around growth. It really seems to be around cost cutting and synergies.
Yeah, 100%. You have two very cheap old tech stocks. I mean, in terms of their valuations right now, it's really Xerox proposing a merger, and then you would set the terms in such a way that Xerox would issue enough stock and then raise enough debt to make it seem like perhaps a premium being paid to HP shareholders. But really, it would be about putting them together, figure out what business lines you can shrink strategically and improve margins and become kind of a cash cow business as a combined entity. And that, it does make some sense on paper. Now, the numbers being thrown around are still well below HP's share price of really earlier this year or a year ago. So it's not exactly a bonanza in terms of today's shareholders, but it would make some sense from an investment banking point of view.
6 minutes left of today's session. The Dow's down by 10 points. After the close, we'll get earnings from Qualcomm. John Fort has a preview. Hey, John.
Hey, Wilf. Yeah, the analyst looking for earnings per share of around 71 cents, revenue $4.7 billion, and then a guide in the current quarter to something similar, $4.7 billion. Now, last quarter, Qualcomm missed on revenue, beat on EPS, issued guidance that some considered tepid, but there's a lot going on. There's looking forward to 5G in 2020, and it'll be interesting to see how that affects the dynamics of the earnings this quarter. Last quarter, they talked about OEMs holding off on those last 4G launches, really looking to go all in on 5G in 2020. But now you also got Apple back in the fold for Qualcomm, so we'll be watching that as well to see how that affects the guidance and also the tone on the call. Of course, I will be talking to CEO Steve Mollenkopf after the initial report comes out, get some comments from him, then sit down with him after the earnings call as well. I am sitting right here at Qualcomm in San Diego, guys.
John, we're looking forward to that. So we're going to see you again really soon, John Fort. Josh, Qualcomm shares, they're up more than 40% year to date. I mean, how much of this is just the bigger bounce we've seen in semis?
I think there's a very high correlation between Qualcomm and, for example, the SOX or the SMH if you want to track the ETF. I could probably off the top of my head name 10 other semiconductor companies that have had outstanding years. The other thing with Qualcomm, though, that's interesting is that for a long time, this stock's been in the penalty box. Yeah. It's like very similar to like an IBM, where it's this just large cap, huge company where other hotter, perceived as younger, sexier tech stocks had done really, really well and it did nothing. So to some extent, there's also a catch-up element to the rally that it's had. I hope it gets above $90, $100 a share. Looks like resistance, and then we'll revisit. But a lot of what we've seen has been in line with the sector so far.
All right, we'll see what kind of numbers we get after the bell. We're also going to get results from Roku after the bell. That stock is up more than 350% so far this year, and Julia Borsten has more on what we can expect there. Julia.
Well, Mark, and Roku has had quite a roller coaster year with the growth of the streaming market driving more users to the platform, as well as new rivals to its streaming service announcing and launching. Now, the company is expected to grow its revenue 48% in the quarter to report a loss of 28 cents per share. That's more more than 3 times the year earlier loss. Now, 2 other key metrics to watch: the number of active accounts projected at around 32 million, and average revenue per user is expected to come in at nearly $22 over the last 12 months. Guys, back over to you.
Julia, thank you. Mike, I mean, we talk so much about the streaming wars. Roku has really been the name that, at least so far this year, has benefited the most from those shifts in streaming.
Yeah, absolutely. Being, kind of a neutral vehicle to get over-the-top streaming apps. It's interesting. The company's been public for just over 2 years right now. And part of the bear case was always, well, this might just be sort of a transitional technology. It's going to be embedded in televisions. We're not necessarily going to need what they do. But just, the more independent streaming apps that get introduced, they're pushing that as the actual bull case, as saying, look, we're just going to be the hosting venue. We're going to be embedded in hardware and also, of course, producing content and selling ads against all these things. So for a while, I think it can still work, at least in terms of sentiment, when you're posting 40+% top line growth.
It also, Mike, of course, as you well know, has recovered from what was a big pullback over the summer, 180 down to 100, now up to about 140 or so, as we await those numbers after the close. We have got 2 minutes left. Let's get to Dom Chu. He's got more on the market internals for us today. Hey, Dom.
All right, so Wilfred, as we take a look at how markets are developing right now, it has been a fairly stable session. And when you have the Dow and the S&P 500 hovering just around maybe a few basis points up or down throughout the course of the day, it may not surprise you to know that the market internals for the New York Stock Exchange show that the markets are pretty stable. Advancers, 1,400 shares. Decliners, 1,500 unchanged. 100, Morgan. Back over to you.
Dom Chu, thank you. We got less than 2 minutes left to go here. Let's send it over to Rick Santelli for a check on bonds. Rick.
Well, the 2-day of 10 says it all. We ran up against resistance mid-180s. We fell back, but we had a solid auction. Look at the Japanese government bond 10-year. It's at the best level since May, but it hasn't closed at 0 or higher in positive territory since early March, finally. 2-day of the dollar index getting up to 98, hasn't closed above 98 since mid-October. Now let's go to the red-painted NASDAQ, Bertha Coombs.
Thanks very much, and I'm red too. Chips are leading the downdraft, led by Microchip, which posted an earnings miss, saying that the China trade situation has now caused weakness in all geographies. Meantime, FANG hits a new low, as in Diamondback Energy, the company hit by lower production and lower prices, while Bloomin' Brands is surging, saying that it's exploring a sale. That's the position of activist investor Jana Partners, which has a 9% stake. Bob, over to you.
Word, we might get a post moment on a phase 1 trade deal. Knocked stocks down in the middle of the day, about 10 points in the S&P. We recovered, but not a lot of energy here. Industrials, the usual trade names on the weak side, so Caterpillar, United Technologies, all of them to the downside. We had oil stocks weak. There was a buildup in crude today. They were a nice rally for oil, though, recently. Chevron down 1.7%. We did have nice demand for consumer days. They were okay, doing all right overall. So Tyson, Smucker, Colgate, other stocks to the upside. There's the closing bell. The Dow Jones Industrial Average recovering from earlier losses. Flat on the day. S&P up 2.
If you're just joining us, welcome to the Closing Bell. I'm Wilfred Frost.
And I'm Morgan Brennan, and for Sarah Eisen, along with Mike Santoli, CNBC Senior Markets Commentator. He is joining us today from San Diego.
Let's check in on how the markets finished. As Bob just said, the S&P did eke out a fractional gain, albeit less than 10 basis points. Slight decline there for the Dow. The Nasdaq down a little bit more, about a third of 1%. The Russell down around 0.6%. Quite a broad range in terms of sector performance. Energy, the big loser, down over 2%. Healthcare, top of the pile, up half of the 1%.
Joining us to talk about the market day, Josh Brown, CEO of Ritholtz Wealth Management, is still with us, along with Victoria Fernandez, Chief Market Strategist at Crossmark Global Investments. But Mike Santoli, we'll start with you. After a series of new record highs earlier this week, is the best way to categorize the action we saw in the market today? Stocks taking a breather?
Yeah, taking a breather. I think the market is kind of digesting a pretty aggressive move in the last month. The S&P's up 6.5%, 7% or something like that from the August lows, up closer to 8%. The big question is, was sentiment going to get a little bit too giddy with the market at new highs, the index is looking a little bit stretched? causing a pullback. So far, it's really just going sideways and churning a little bit and probably trying to cool off a bit as opposed to pulling back hard. We'll see if that continues, but I do think the thing to continue to watch is whether sentiment and people's positioning gets a little too aggressive after this pretty strong rally we've had.
Victoria, we're at record market highs or have been around those levels this week. Does that mean you've been taking profits?
We've been taking a little bit from names that we've had some disappointment on earnings and trying to find new names to put those in. Texas Instruments is one, Cisco is another. We're not selling out of names completely. We still like the companies, but trimming them back a little bit where we have some opportunity and finding some new names we think will have better growth going forward. Comcast is a name that we added to. Lennar is a new name we had in our portfolio earlier in the year, and we've added to that. But because we're kind of, we've had these new highs and we're looking to go sideways a little bit, we're also taking this as an opportunity to add to some of our more core value names like Coca-Cola and McDonald's.
Josh, the biggest moves we saw in the averages today came on the heels of headlines around U.S.-China trade and the possibility that a meeting or signing of a potential phase one could get pushed back to December, and there's debate about where such a meeting could even take place.
Right.
How much is trade continuing to dictate market moves more broadly?
I think it moves the market, but I think most of what you're seeing is algorithmic. I think there are basically bots that are reading headlines, and they're programmed to buy or sell E-minis in the morning, depending on what gets tweeted. And that, as somebody who I manage money for people, and we don't discuss it. Like, we don't have conversations about the trade war. It is what it is. We've been in this paradigm for 2 years, and yet the market is making new highs. Yesterday, you had a new record high in small cap value. The companies in the small cap value index do not transact with China. So, I just think it's important, focus on the big picture. And by the way, if you look at 30-day returns, you have to really search hard to find a country market somewhere in the world that is not green on the month. So you could say that's because trade is thawing. Okay, sure, whatever narrative you want. The point is you've got stock markets around the world breaking out. 52-week highs, all-time record highs, emerging markets look better, et cetera, et cetera. So consider the context of each day's news and don't overreact because extrapolation will have you offsides.
All right, we got our first earnings out. It's from Qualcomm, and John Ford has those numbers for us. John?
Yeah, Morgan, you can see the stock moving higher by about 4%, at least initially after hours, on a beat on the top and bottom lines. Qualcomm reporting revenue of $4.8 billion versus $4.7 expected, and EPS non-GAAP of 78 cents versus 71 cents expected. Also, the guide, a little bit stronger than the street was expecting, guide to $4.8 billion in revenue at the midpoint, and 85 cents non-GAAP EPS. Qualcomm, in its release, saying that they estimate 5G handsets in 2020 are going to be 175 to 225 million units. Also pointing out that overall chip shipments were a bit higher than the midpoint of the prior guidance, and the licensing business also coming in a bit stronger than the midpoint of prior guidance. So given all of the headwinds that Qualcomm had previously mentioned, such as Huawei gaining share in China, of course not paying Qualcomm as much as Qualcomm would like, things like that, weaker demand in China, these numbers looking good to investors based on the tamped down expectations from last quarter, guys.
John, thanks so much for that. Qualcomm trading higher by 5%. You'll see there on the side of the screen, Roku's slipping significantly. We're going to have a deep dive into those numbers in just a moment. But Josh, first of all, Qualcomm up 5%. We talked about it briefly beforehand. Do you like this? Does this give you encouraging momentum for all of these types of stocks?
I think Qualcomm's very idiosyncratic. It's tough to. It's kind of got its own challenges. The thing with Apple for years now, and it's in a lot of markets where it kind of has the market almost to itself in some of the types of chips it sells. So I don't want to take too much from this and spread it like fairy dust across every other microchip stock or technology stock. But yeah, of course, you'd rather see a big bellwether in the sector have a good report than a bad report. This is obviously a good report.
Yeah, the 5G numbers are interesting. Shipments better than expected. Licensing business better than expected. But on the 5G piece in particular, that's certainly been a big focus because it's seen as one of those big U.S. players, and adoption through the lens of Qualcomm Qualcomm. That's where it'll, I guess, happen the earliest. So
that's really
we'll
a 2020 story. Like, we probably haven't even seen all of the momentum that we might from that. So it's good.
Yeah, we'll see what comes of John Fort's conversation with the CEO.
Mike, what's your take on where Qualcomm stands at the moment and whether it can significantly break out and drag the rest of its sector with it?
Yeah, I think the market has been kind of giving it a lot of credit for continuing this momentum. You guys were talking about how it had been in the doghouse. You got the settlement with Apple. It's no longer the cheap stock it used to be, but I do think that the market is essentially saying this is your key play on 5G. Obviously, they have a kind of a broader macro take on handsets and the royalty streams. And I think the entire semi group is kind of traded a little bit on kind of a hope that the cycle is going to make an aggressive turn for the better. And so far, these numbers, at least the guide for Qualcomm, is enough to keep the bulls in charge.
Let's get to Roku. As we said, down some 13% after reporting numbers. Julia's been digging through them for us. Julia.
Well, that's right. Roku's revenues beating estimates, coming in at $261 million versus estimates of $257 million, so just a hair better than projections. The company announcing a loss of 22 cents per share, but that is not comparable to the estimates, so we're not going to be comparing that. But if you look at some of the other key numbers here, active accounts, the company reporting 32.3 million active accounts. That's an addition of 1.7 million and better than the 31.9 million expected. And then average revenue per user also coming in better than expected at $22.58. That's versus expectations of $21.68. Now, guidance does seem to be pretty much in line with expectations. The company has raised its revenue and gross profit outlook, reflecting stronger performance, and says they're raising those expectations to the midpoint of between 30 million from 35 million. So that's where the earnings outlook midpoint coming down by 5 million, reflecting a continued investment in the business, as well as a $5 million headwind due to the acquisition of that company, Dataxu, and those expenses. So we see the stock now down 16%. We'll continue to dig through here and look to understand what's behind that dramatic move lower.
All right, Julia, thank you. Okay, Josh, I see we've got some noise around the EPS number, the loss of 22 cents, but better than expected active account numbers, ARPU's better, guidance largely in line. Is it just when you see a name like Roku up, 350% year to date, that the bar is set so high?
Yeah, I mean, yes, of course. It's 17 times sales. Like, this is like, but let's ignore price and just focus on the earnings. It's, the earnings call. Like, they're doing what they said they would do. They're executing. It may not be enough to satisfy whoever had driven the stock up most recently, and that's why maybe you get some selling. I have no position here, but I do want to point out, a year ago, last October, it went from 75 to 32, and it had absolutely no meaning at all. The stock was right back by January. So, again, these types of names, they draw a lot of trader interest. They tend to be highly volatile, but not every move you see is the right move. So I would stay tuned on this one. I don't know that it finishes even the night session down 15%.
All right, well, we'll keep watching it. In the meantime, Expedia's earnings are out as well, and Seema Modi has those numbers. Seema.
Hey, Morgan, it's a miss on earnings and revenue for Expedia, the online travel operator. Earnings of $3.38 adjusted versus the estimate of $3.80. Revenue coming in at $3.56 billion, the estimate $3.58 billion. But perhaps most important is third quarter gross bookings for Vrbo. That's its home rental platform, which competes with Airbnb. Gross bookings up 5%. That's better than last quarter, but its revenue growth for Vrbo up 14%. That is slower than the 17% growth it saw last quarter. And guys, we know this is certainly a space we're watching very closely ahead of Airbnb's IPO next year. And it's a highly competitive industry, not just Airbnb, even Booking Holdings, which reports tomorrow has its own home rental platform. Wilf, I'm going to send it back to you. We are looking at the stock down here in extended trade.
Seema, I'll take it. Thank you. Mike, I mean, we've been having this conversation for the last couple of days about home sharing and all the regulatory risks that seem to be setting in. I mean, Jersey City, case in point, you saw the vote take place there yesterday. We talk about it in light of Airbnb, but when you're looking at a name like Expedia, there's risk there too, right?
Yes, I mean, there's obviously risk there, and I think what Seema said about it being a crowded space and one where the booking tools are not necessarily in the best spot in terms of reaping the economics of the whole travel booking transaction. It seems like what the market has been telling you for a little while right here. We're not at a point in the cycle where they're the ones in control, and that's why I think it has been under some pressure. It's been a little bit suspect for a while now, and these numbers not enough to really change that story, at least, you know, in the short-term basis.
Mike, what's your take on this Roku move that despite kind of most beats on most of the lines, it's big trade down?
I guess I would just echo what Josh said. It's stretched very tight in terms of valuation. Most of the value of Roku right now is about the very long-term opportunity and what big a piece of the ultimate internet TV world they end up owning on a quarterly basis. Roughly as expected results might not be enough when you basically have these wide swings in supply and demand. Just look at a 2-year chart of this stock and see of all the tremendous air pockets in the stock and then the kind of rebound. So I do think it's more about positioning ahead of a number that was just not good enough to get renewed optimism into it.
Victoria, all the earnings we've gotten so far, they're tech-facing, right? They're tech companies. We've got Qualcomm, so you're talking about semiconductors, it's Expedia, so you're talking about online travel and bookings, or it's Roku, and you're talking about streaming. Is there anything that you like or value to be had either in these names, as we're seeing these big moves in the after-hours trade, or just in these industries in general?
Well, of those names, Morgan, Qualcomm is a name that we actually have in our portfolio. We hold it both on the fixed income and the equity side. And I know that we were talking about it earlier. They did come out with some strong earnings there. We have to remember that their investor day is coming up in a couple of weeks. They still have their CFO search going on. So I think there's still a lot of issues around Qualcomm that we'll be watching carefully. But as they've done over the past few years, they reported at the high end of that guidance. And so we think there's some more potential going there. When you're looking at these other online items, obviously there's upside potential going forward with cord cutting for Roku, and online travel experiences is what the consumer's really looking for, so that's good for Expedia. But I think it's going to be more idiosyncratic with some of these companies.
We've got another earnings report out. It's Wynn. Let's get to Contessa Brewer. Hey, Contessa.
Hi there, Wilf. We're seeing a big miss here. The revenues are coming in roughly in line, a slight miss coming in at $1.65 billion versus the estimate of $1.67 billion. But the number to pay attention to in this report, and this is what they pay attention to in these casino companies, is the adjusted property EBITDA. And in Macau, we're seeing a big miss here. For instance, the Wynn Macau estimate was for EBITDA was $148.1 million. It came in at $50 million. At the Wynn Palace, the analysts were expecting $171.7 million. It came in at $64 million. These are the numbers that are driving the shares lower right now, down 2.9% in extended trading. We know there have been big headwinds. VIP has been under pressure, and Wynn is likely to talk about how they're trying to turn their attention to mass and how they're improving in their market share in mass. We'll dig through the numbers here and bring you anything else that stands out.
And so, Contessa, the new launch of Boston, not enough to pick up the slack from Macau?
No, in fact, you know what? Those revenues came in slightly higher than analysts had expected. It did somewhat offset the drag from Macau, but it's just simply not big enough to offset that big of a loss.
Contessa, thank you for that one. Wynn trading down. We're going to get another one straight away before discussing them. TripAdvisor, Seema's got it for us.
And Wilf, it's another disappointing report from a travel operator, this time at TripAdvisor, reporting earnings of 58 cents adjusted, well below the estimate of 69 cents. Revenue came in light. Q3, Stephen Coffer, the CFO of the company, saying Q3 was more difficult than we anticipated, but we are taking action. And in light of these results, the company is saying that it's announcing a comprehensive cost structure evaluation. It's declaring a special cash dividend of $3.50 per share and returning an estimated $490 million of capital to shareholders. So they're really trying to take strategic actions to appease shareholders, because this has certainly been a stock that has not performed well. It's down 4% in extended trade, but a year-to-date chart will show you that it has come under significant pressure, down double digits, and we will be on the conference call when it starts to get the full story here. Guys, for now, back to you.
Seema, thanks so much for that. Josh, quite a lot of after-hours decliners now. Qualcomm, the one bright spot. That concern you ahead of tomorrow? Do you think there's enough negative momentum out there?
Not necessarily. I mean, these are well-known companies in terms of, like, we know the brands, but market cap-wise, they don't have a big impact on anything. Take Wynn, for example. It's been a terrible stock for 5.5 years. Peaked in March of 2014 at about 200, has not even been near that since. It's in a no man's land in terms of its range, somewhere right in the middle. There's nothing really specific to the Wynn story that impacts other companies in the S&P. So I just think, like, compartmentalize that. It's not a great... Gambling's not a great business, believe it or not. It just isn't anymore. Macau especially. So put that to the side. The Trip and Expedia stuff, a lot of people might look at that and say it's a read-through to the consumer. No, it isn't. People are traveling plenty. The airline stocks are the proxy for that. The hotel stocks, we're fine. This is another cutthroat business. We talked about asset management in the prior hour. Online travel booking is cutthroat. It's not a great business. So to see these companies stumble, I don't think we want to take that and say, oh, there's an issue with the consumer. It's just not what's going on.
We've got a news alert. It's on Purdue Pharma. Let's get to Meg Terrell.
Hey, well, Purdue Pharma is here in bankruptcy court. It, of course, is the maker of OxyContin, and it's under thousands of lawsuits that have been filed against it, saying that it essentially caused the crisis. Now, the judge here in bankruptcy court has issued a temporary stay on all of the litigation, those thousands of suits against Purdue Pharma, until April 8th, essentially because Purdue's side argued that the resources on the company were going to get drained as they tried to reach a potential settlement here. And at least half the states have opposed to the settlement offer that Purdue has put on the table. So this is essentially to try to give them time to reach some agreements on information sharing and due diligence to potentially at some point work toward getting to an agreement. Now, the settlement that Purdue has put on the table, they value it at about $10 billion. That involves the company going into the bankruptcy process and coming out a public trust where its assets would be deployed to help fight the opioid crisis here in this country. The Sackler family, the billionaires that own Purdue Pharma, would contribute at least $3 billion to that settlement offer as well. And through this temporary stay, the litigation against the Sacklers would also be paused, guys, until April. There are opportunities for parties to opt out before then. Nobody has come to an agreement here, but for now, a holding pattern in litigation against Purdue Pharma and the Sacklers, guys. Back over to you.
Meg Terrell, thank you for bringing us the latest on this. We got Square earnings now, too. We're going to go to Deirdre Bosa for those.
Hey, Morgan, bit of a mixed quarter. We've got a beat on the top and bottom lines, but Square lowered its guidance for the fourth quarter and the full year to reflect its sale of Caviar. We're seeing adjusted revenue of $602 million versus the $596 million the street was expecting. Adjusted EPS of 25 cents. That is a nickel beat. Fourth quarter, as I said, full year guidance lower than forecast, lower than the company previously guided. Shares in the after hours, they've been bouncing between gains and losses as investors digest that and try to figure out the effect of that Caviar sale. Another important metric, gross payment volume, or GPV, coming in a little bit above expectations, $28.2 billion versus $28 billion. Also just want to mention the Square Cash app because Square has been putting a lot of focus on this. Revenue excluding Bitcoin, $159 million in the quarter, more than doubling year over year. In the release, the company also says that they are increasing their investment in go-to-market initiatives to drive continued growth. So in the after hours, we're seeing shares slightly up 0.8%, but over the last 12 months, they are down 20%. Back to you.
Deirdre, thank you. And our thanks to Josh Brown, Victoria Fernandez, and Mike Santoli for taking us through another day of earnings parade. Up next, a Roku Bull will weigh in on today's results. And later, we'll get comments, from Qualcomm CEO about the quarter. Closing bell is back in 90 seconds.
It's another Wednesday evening, yet another cold day. So ditch the British winter and chase the sun across the globe with British Airways from London Gatwick and witness luscious scenery and calming waves. Fly from London Gatwick to St. Lucia with British Airways, with flights and 7 nights hotel from just £739 per person. Don't miss out. Book by November the 12th at ba.com/wintersun. With British Airways, incredible is within reach. Booking fees and conditions may apply. Limited availability. Selected flights in March.
In case you didn't know, TuneIn lets you listen to the same radio stations you pick up on your home or car radio, except you can hear them from anywhere. If you want to find a station from somewhere else in the world, navigate to the By Location section under Browse. Keep exploring with TuneIn.
Catch the latest news as it happens with MSNBC on TuneIn. From American politics to global events, when breaking news hits, you'll never miss a moment again. Search MSNBC on TuneIn to hear the latest.
Welcome back. Shares of Roku trading sharply lower, 14% or so after reporting earnings moments ago. For more, let's get the numbers. For more on the numbers, let's bring in Tom Forte from D.A. Davidson and Company and Mark Skotovich from Rosenblatt Securities. Very good afternoon to you both. Tom, why is it trading down so much?
Yep, so it looks to me like it's a victim of investor sentiment. If you look at the mid-cap internet space, it's been a terrible quarter. Grubhub went down 40% last week. Also saw big pullbacks in Wayfair, Etsy, and Pinterest. So I think here it's a victim of investor sentiment, especially in the mid-cap internet tech space.
Mark, do you see it the same way? What do you think of these numbers?
Yeah, no, I'd agree with that. I think, the beat was 2%, roughly 2% on revenue. If you look at the last 2 quarters, the average was about 8%. So, I mean, that's more optical, but certainly it's a momentum stock. So there was a higher expectation out there. I think if you look at gross margins and users, they were stable. ARPU was better. I think if you look at the guide, revenue looks good to me. Gross margins are a little squishy, so there'll be some questions on the call as it relates to gross margin. But, generally speaking, this is, obviously a volatile stock. And I think if you look at the big picture here, what we like about it is it's still the best and most scalable platform for OTT or connected TV advertising for both advertisers as well as a place for publishers to sell inventory. And, 35 million U.S. broadband households, which we expect to go to 50 million over the next several years. This has a long runway ahead.
Tom, the fact that we've just seen Apple TV Plus launch, we're poised to see Disney Plus launch, and then we're going to get more services behind that. Is that going to be a headwind or a tailwind for Roku?
It should definitely be a tailwind, but if you look at the company, it's definitely swimming with the sharks when it comes to competition. They work with or compete against really the 3 biggest tech companies in the world, in Amazon, Apple, and Google. But net, I see that as being more of a tailwind than a headwind.
Do you feel, Mark, that moving forward in the long term, this company could become a victim of its own success, whether that's because the TV manufacturers want to push back on the hardware that they make or the over-the-top streaming apps want to push back on the slice of the pie that Roku's taking?
No, it's a great question, Will. I would say there is some question that's been, around that topic. TCL has been a big OEM for Roku, and they've both grown their success together. I think there has been some discussion of that, but if you think about it, they're both sort of married together here. So if TCL wants to go another direction, I think a lot of that growth momentum that they've been piggybacking on with Roku sort of goes away for them. So I don't see that as a major concern in our eyes at this point.
All right, well, we'll keep an ear out for that investor call that's coming up in the next hour. Meantime, shares of Roku are plunging 13% right now on the heels of those numbers. Thank you for joining us, gentlemen. Tom Forte and Mark Skotovich. Still ahead, we will break down the charts to see whether the big rally in financials over the past month can keep fueling the broader market rally. Closing bell, we'll be right back.
It was Sophie's big day.
It's another Wednesday evening. Yet another cold day. So ditch the British winter and chase the sun across the globe with British Airways from London Gatwick and relax with 365 beautiful beaches.
So yes, sir, what would you like to have?
Fly from London Gatwick to Antigua with British Airways from £223 each way based on a return fare. Don't miss out. Book by November the 12th at ba.com/wintersun with British Airways. Incredible is within reach. Booking fees and conditions may apply. Limited availability. Selected flights in March.
In the dictionary, a podcast is this: a digital audio file made available on the internet, typically as a series, of which new installments can be received by subscribers automatically. But on TuneIn, a podcast is this.
I'm Adam Grant, and this is Work Life, my podcast with Ted. I study how to make work not suck.
And it's defined like this.
Blackout is a suspense-filled thriller from Endeavor Audio and Q-Code.
From news, sports, to pop culture, comedy, and beyond. Define your own podcast possibilities on TuneIn.
Are you curious what others are listening to on TuneIn? Head to the trending section under Browse to see the most popular stations and podcasts among TuneIn listeners right now. Check it out. You might just discover something new for yourself.
The Better Network is now on TuneIn. This is Brent Musburger. Search the Better Network. That's the BETR network. And then let us get you better prepared to better enjoy the day in sports. The NFL, college football, basketball, hockey, baseball. Sharpen your edge. The Better Network is now on TuneIn. Be better informed. Be better prepared. Search the Better Network. That's BETR.
College football is live on TuneIn. Listen for free to games from more than 140 schools all season long.
To the 10, all the way to the checkerboard.
This Saturday at 3:30 p.m. Eastern, number 1 LSU is taking on number 2 Alabama with a battle between LSU's quarterback Joe Burrow and Alabama's QB Tua Tagovailoa. Both are potential number 1 picks in the NFL Draft. Listen to every call and every game of your school all season long for free on TuneIn. Just search college to listen today.
Some days life can get in the way of catching up on the news that moves your world. TuneIn is here to help. With live 24/7 coverage from CNN wherever you go on the TuneIn app, you can always find a slice of your schedule, however long, to check in on the biggest stories of the day.
Hell hath no fury. The president's counselor went on a rampage on a taped phone call with Washington Examiner reporter.
Search CNN on TuneIn to get the live news when it matters most.
Welcome back to Closing Bell. Financials are the best performing sector over the past month and a major driver of the market, of the march, I should say, to new market highs. Dom Chu is at headquarters with more on this. Dom.
All right, so Morgan, we've got a sector in the S&P 500 that is up 8% in that 1 month span, like you said. So the best performing sector in the S&P 500. If you take a look at one of the main reasons why those financial stocks and specifically the banks have been moving higher is because of that steepening of the yield curve, that differential between long-term and short-term interest rates in the United States. As measured by the 2-10 spread for treasuries, as you can see, we were pretty much range-bound for a while through most of this year, and then a steep drop-off, but then that subsequent rise. Remember, at the lows, we were about -5 basis points for this yield curve. Now we're up to about 21, 22 basis points, and that means banks are doing a little bit better. Take a look at this part of the sector, because the banks specifically, Wilfred Morgan, are doing really well. 9% gain for the Spider Bank ETF, and then 9% gains for the Regional Bank ETF. This sector will be one to watch, especially with Wilfred, the Fed doing its part to lower short-term rates and move a steepening yield curve even wider apart. We'll see if those banks can keep the momentum. Wolf, back over to you.
Dom Chu, back at HQ. You said it all. Nothing more to add. Great analysis. Thank you. Still ahead, the war of words between presidential candidate Elizabeth Warren and JP Morgan CEO Jamie Dimon intensifying after he said her rhetoric was potentially vilifying successful people. The latest details up next.
This is Apple Card, a new kind of credit card. It's another Wednesday evening, yet another cold day. So ditch the British winter and chase the sun across the globe with British Airways from London Gatwick, and relax with 365 beautiful beaches.
So yes, sir. What would you like to have?
Fly from London Gatwick to Antigua with British Airways from £223 each way based on a return fare. Don't miss out. Book by November the 12th at ba.com/wintersun. With British Airways, incredible is within reach. Booking fees and conditions may apply. Limited availability. Selected flights in March.
Pascal gobbles up the rebound and slams it down.
Get your favorite NBA team right here on TuneIn.
A step back, deep three, it's up and in.
Search NBA on TuneIn and hear all the action. The NBA lives on TuneIn.
Couldn't. Here's a swing and a drive deep to right field. Looking up. Goodbye, baseball.
Between game-winning shots and walk-off homers, follow TuneIn on social media to discover the latest and greatest in live sports.
With the 24th pick in the 2019 NFL Draft.
From live reminders that the biggest MLB games are on the air to recommendations of the best new sports talk shows and podcasts.
He's going to be fine. He's going to be good right away in 3 years.
Follow at TuneIn on Facebook, Twitter, and Instagram to get the most out of TuneIn.
This week on the New Yorker Radio Hour, I'll talk with presidential candidate Pete Buttigieg, whose star seems to be rising in the state of Iowa.
I've advanced past roughly 20 of my competitors, which is not bad for somebody nobody had heard of in January. There are, admittedly, a few more big hills to climb.
Listen to this episode of the New Yorker Radio Hour from WNYC Studios on TuneIn today.
College football is live on TuneIn. Listen for free to games from more than 140 schools all season long.
To the 10, all the way to the checkerboard.
This Saturday at 3:30 p.m. Eastern, number 1 LSU is taking on number 2 Alabama with a battle between LSU's quarterback Joe Burrow and Alabama's QB Tua Tagovailoa. Both are potential number 1 picks in the NFL Draft. Listen to every call and every game of your school all season long for free on TuneIn. Just search college to listen today.
Time for a CNBC News Update with Sue Herrera. Hi, Sue.
Hello, Wilf. Hello, everyone. Here's what's happening at this hour. The House has released the transcript of testimony that Bill Taylor gave last month behind closed doors. Taylor, the top U.S. diplomat in Ukraine, told members of Congress that President Trump directed officials to tie foreign aid to Trump's demands that Ukraine open an investigation into the Biden family and the 2016 election. Senator Amy Klobuchar is the latest Democratic candidate for president to file paperwork to be in the New Hampshire primary. She arrived at the courthouse in Concord to cheers.
The argument is that we are a country of patriots and that we put our country first, and that there's a lot of people out there, including our fired up Democratic base and including independents and moderate Republicans who've had it. They don't want this guy as president anymore.
And as they say, it's the most wonderful time of the year, the time when the Aldi wine and beer advent calendars go on sale. They went on sale this morning. People camped out for hours at this location in Ohio, where temperatures dipped to about freezing. The wine calendar features 24 unique wines from regions around the world, while the beer calendar has a variety of imported beers in 11-ounce bottles, I should say.
So,
yes.
So 11-ounce bottles. Great. So it's not a full bottle per kind of day.
Right.
Do you open it in the morning like you would your normal one? I mean,
I've never
dangerous.
had that kind of advent calendar, but I probably wouldn't open it in the morning.
Well, you could still open the door and then know what you've got to return home to later in the evening.
And then you could pair it with whatever you're making for dinner.
Well, exactly. I like this a lot. I didn't know about these.
I don't know. I prefer chocolate. That's just me, though. All right.
I'm with Will.
Thank you.
You got it.
Thank you.
It's been a very busy session for after hours earnings. Qualcomm surging after beating earnings estimates. Roku plunging after beating revenue expectations, but lowering the midpoint of its guidance. Square shares are volatile despite beating on the top and bottom lines. And Expedia is lower after missing earnings estimates because of weaker than expected gross bookings.
Moving on. Now, yesterday, I sat down exclusively with JP Morgan's CEO, Jamie Dimon, asked him about Senator Warren's commentary and, quote, harsh words against big business and capitalism. Here was his response.
You really have to ask her what she really means. She uses some pretty harsh words. Some would say vilifies successful people. So I don't like vilifying anybody. I think we should applaud successful people. A lot of people come to this company for opportunity and choice and success. We want that for everybody. Now, that's a little bit different than paying your fair share and how the taxation system should work. That I completely understand. But I think we have to look at America was founded on free enterprise. Freedom and free enterprise are interchangeable. You can't separate them from each other. Successful companies have lifted up society. It doesn't mean they can't do more. It doesn't mean they didn't make mistakes. But so I think we should applaud that. And if people have very specific things that we should do different, then we should think about doing them different.
Senator Warren tweeted in response last night saying, quote, "It's really simple. Jamie Dimon and his buddies are successful in part because of the opportunities, workforce and public services that we all paid for. It's only fair that he and his billionaire friends chip in to make sure everyone else has a chance to succeed." That was the first tweet. And Morgan, I would say the funny thing about that is I don't think there's anything in the first tweet that Jamie Dimon would disagree with, whether it was his comments yesterday or his comments in the past more broadly. Now, this was her second tweet. The fact that they've reacted so strongly, so angrily to being asked to chip in more tells you all you need to know. The system is working great for the wealthy and well-connected, and Jamie Dimon doesn't want that to change. I'm going to fight to make sure it works for everyone. Now, I'd also say in this tweet, I don't think he was angry yesterday in his comments, far from it, but I would accept that he doesn't necessarily want a total change to capitalism. Yesterday, he said specifically, quote, "Changing the complete nature of how you run a corporation, absolutely not. We don't want that." And he said things like that quite strongly, but I don't think angrily. And I think the interesting thing about this debate, we mentioned this slightly yesterday, is clearly we know a Jamie Dimon or a Leon Cooperman are never going to vote for Senator Warren. But there are some things that they are advocating themselves which do overlap with Senator Warren. It's just getting all a little bit too personal, which we understand in an election year in the social media age. But there are actually some things in there which they agree on. Not everything, but a few things.
Here's the big takeaway. Senator Warren is clearly watching CNBC. She's responding to all of these different interviews on CNBC. Meantime, Bill Gates just commenting on Elizabeth Warren and her wealth tax plan at the Deal Book Conference. Take a listen.
Have you ever talked to Elizabeth Warren about any of this before? Would you? Would you want to?
You know, I'm not sure how open-minded she is, or that she'd even be willing to sit down with somebody, you know, who has large amounts of money.
Gates also said he's paid over $10 billion in taxes, and if he had to pay $20 billion, it would be, quote, fine. Speaking of taxes, Robert Frank joins us now with new details from Senator Warren's proposal. Robert.
Hey, Morgan, interesting that Gates saying there he actually wouldn't support a wealth tax, but would support other higher taxes on the wealthy. And speaking of chipping in, Warren now planning to raise over $2 trillion a year for that Medicare plan from a new tax on capital gains. That would be an annual tax on the appreciation of stock or assets, even if you didn't sell it. So right now, you only pay capital gains tax when you sell an asset that has gained value. So if you own, let's say, 100 shares of Apple, which is up about $100 this year, your gain would be $10,000. Now, the tax on that would be $2,400 currently if you sold them. But under Warren's plan, which also increases the capital gains tax rate, you would have to pay a tax of $3,700 this year, even if you held on to the shares. Now, Warren says the tax would only apply to the top 1% of households, and it would exclude retirement accounts. As she says, ultra millionaires and billionaires won't be able to earn income on giant fortunes year after year without paying a penny in taxes. Guys, back to you.
Robert, I have to say, I mean, particularly as we've discussed this so many times in the sort of post-QE era, where most people that own stocks tend to be on the more wealthy end of the spectrum as opposed to the poor end of the spectrum, and that QE has mainly benefited those people with assets and financial assets as opposed to the fundamental economy, that this area does kind of need to be taxed a little bit more, but taxing before you crystallize gains is crazy.
Well, whether it needs to be taxed more or less is a subject for policy experts in politics. But what I would say is even Bill Gates just said at DealBook that maybe, to your point, there are these fortunes that have, you know, in Gates's case, he's added $38 billion in wealth this year because of Step Up in charity. That will